2. Hello, 2.
As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of the causes we support is education, helping to empower people to develop their mind. So we identified Ajay Comprehensive Senior High School. With support of the government, we were able to get access to the school. So what we did was to help them set up an ICT lab that has 21 computers. We also had 21 workstations. We provided them with 9 kVA solar inverter system and air conditioning system. We renovated them. The hall that houses this ICT facilities, and also did some renovation at the school.
About 4 years ago, I always dreamed of having a befitting ICT laboratory for my students. Today, I would say it's a dream come true. I want to say thank you very much to Cardinalstone.
At Cardinalstone, we firmly believe that quality education is the key to unlocking a brighter future for generations to come.
This laboratory is going to help me and my colleagues to learn more and go deep in technology.
I would say thank you so much to Cardinalstone who have provided us with this great opportunity.
Thank you, Cardinalstone. We love you.
We also journeyed to Modupe Cole Memorial, where we discovered another vital need, a school closet that held the potential to be transformed into a sanctuary of inspiration.
For Modupe Cole Memorial, just walking into the hostel prior to the execution of this project, everywhere was in disarray. The children didn't have wardrobes, their nets were torn. As little as these things may sound, just ensuring that the project was able to renovate the hostel, provide these wardrobes and fix the nets, we believe that this would improve the well-being of these children.
They have tried as much as possible to make sure that they give us a befitting wardrobe, and apart from that, they repair a door for us and they do a lot of mosquito nets.
These CSR initiatives are not just a celebration of our 15-year journey, but also a testament to the values that define us: empathy, dedication, and a commitment to fostering growth. Together, let us continue to write a story of progress, where every child's dream is nurtured and every mind is ignited with the flame of knowledge. As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of the causes we support is education, helping to empower people to develop their mind. So we identified Ajay Comprehensive Senior High School. With support of the government, we were able to get access to the school. So what we did was to help them set up an ICT lab that has 21 computers. We also had 21 workstations. We provided them with 9 kVA solar inverter system and air conditioning system. We renovated them. the hall that houses this ICT facilities, and also did some renovation at the school.
About 4 years ago, I always dreamed of having a befitting ICT laboratory for my students. Today, I would say it's a dream come true. I want to say thank you very much to Cardinalstone.
At Cardinalstone, we firmly believe that quality education is the key to unlocking a brighter future for generations to come.
This laboratory is going to help me and my colleagues to learn more and go deep in technology.
I would say thank you so much to Cardinalstone who have provided us with this great opportunity.
Thank you, Cardinalstone. We love you.
We also journeyed to Modupe Cole Memorial, where we discovered another vital need, a school closet that held the potential to be transformed into a sanctuary of inspiration.
For Modupe Cole Memorial, just walking into the hostel prior to the execution of this project, everywhere was in disarray. The children didn't have wardrobes, their nets were torn. As little as these things may sound, just ensuring that the project was able to renovate the hostel, provide these wardrobes and fix the nets, we believe that this would improve the well-being of these children.
They have tried as much as possible to make sure that they give us a befitting wardrobe, and apart from that, they repair a door for us and they do a lot of mosquito nets.
These CSR initiatives are not just a celebration of our 15-year journey, but also a testament to the values that define us: empathy, dedication, and a commitment to fostering growth. Together, let us continue to write a story of progress, where every child's dream is nurtured and every mind is ignited with the flame of knowledge. As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of the causes we support is education, helping to empower people to develop their mind. So we identified Ajay Comprehensive Senior High School. With support of the government, we were able to get access to the school. So what we did was to help them set up an ICT lab that has 21 computer. We also had 21 workstations. We provided them with 9 kVA solar inverter system and air conditioning system. We renovated the hall that houses this ICT facilities, and also did some renovation at the school.
About 4 years ago, I always dreamed of having a befitting ICT laboratory for my students. Today, I would say it's a dream come true. I want to say thank you very much to Cardinalstone.
At Cardinalstone, we firmly believe that quality education is the key to unlocking a brighter future for generations to come.
This laboratory is going to help me and my colleagues to learn more and go deep in technology.
I would say thank you so much to Cardinalstone who have provided us with this great opportunity.
Thank you, Cardinalstone. We love you.
We also journeyed to Modupe Cole Memorial, where we discovered another vital need, a school closet that held the potential to be transformed into a sanctuary of inspiration.
For Modupe Cole Memorial, just walking into the hostel prior to the execution of this project, everywhere was in disarray. The children didn't have wardrobes, their nets were torn. As little as these things may sound, just ensuring that the project was able to renovate the hostel, provide these wardrobes and fix the nets, we believe that this would improve the well-being of these children.
They have tried as much as possible to make sure that they give us a befitting wardrobe, and apart from that, they repair a door for us and they do a lot of mosquito nets.
These CSR initiatives are not just a celebration of our 15-year journey, but also a testament to the values that define us: empathy, dedication, and a commitment to fostering growth. Together, let us continue to write a story of progress, where every child's dream is nurtured and every mind is ignited with the flame of knowledge. As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of the causes we support is education, helping to empower people to develop their mind. So we identified Ajay Comprehensive Senior High School. With support of the government, we were able to get access to the school. So what we did was to help them set up an ICT lab that has 21 computer. We also had 21 workstations. We provided them with 9 kVA solar inverter system and air conditioning system. We renovated the hall that houses this ICT facilities, and also did some renovation at the school.
About 4 years ago, I always dreamed of having a befitting ICT laboratory for my students. Today, I would say it's a dream come true. I want to say thank you very much to Cardinalstone.
At Cardinalstone, we firmly believe that quality education is the key to unlocking a brighter future for generations to come.
This laboratory is going to help me and my colleagues to learn more and go deep in technology.
I would say thank you so much to Cardinalstone who have provided us with this great opportunity.
Thank you, Cardinalstone. We love you.
We also journeyed to Modupe Cole Memorial, where we discovered another vital need: a school closet that held the potential to be transformed into a sanctuary of inspiration.
For Modupe Cole Memorial, just walking into the hostel prior to the execution of this project, everywhere was in disarray. The children didn't have wardrobes, their nets were torn. As little as these things may sound, just ensuring that the project was able to renovate the hostel, provide these wardrobes and fix the nets, we believe that this would improve the well-being of these children.
They have tried as much as possible to make sure that they give us a befitting wardrobe, and apart from that, they repair a door for us and they do a lot of mosquito nets.
These CSR initiatives are not just a celebration of our 15-year journey, but also a testament to the values that define us: empathy, dedication, and a commitment to fostering growth. Together, let us continue to write a story of progress, where every child's dream is nurtured and every mind is ignited with the flame of knowledge. As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of the causes we support is education, helping to empower people to develop their mind. So we identified Ajay Comprehensive Senior High School. With support of the government, we were able to get access to the school. So what we did was to help them set up an ICT lab that has 21 computer. We also had 21 workstations. We provided them with 9 kVA solar inverter system and air conditioning system. We renovated the hall that houses this ICT facilities, and also did some renovation at the school.
About 4 years ago, I always dreamed of having a befitting ICT laboratory for my students. Today, I would say it's a dream come true. I want to say thank you very much to Cardinalstone.
At Cardinalstone, we firmly believe that quality education is the key to unlocking a brighter future for generations to come.
This laboratory is going to help me and my colleagues to learn more and go deep in technology.
I would say thank you so much to Cardinalstone who have provided us with this great opportunity.
Thank you, Cardinalstone. We love you.
We also journeyed to Modupe Cole Memorial, where we discovered another vital need, a school closet that held the potential to be transformed into a sanctuary of inspiration.
For Modupe Cole Memorial, just walking into the hostel prior to the execution of this project, everywhere was in disarray. The children didn't have wardrobes, their nets were torn. As little as these things may sound, just ensuring that the project was able to renovate the hostel, provide these wardrobes and fix the nets, we believe that this would improve the well-being of these children.
They have tried as much as possible to make sure that they give us a befitting wardrobe, and apart from that, they repair a door for us and they do a lot of mosquito nets.
These CSR initiatives are not just a celebration of our 15-year journey, but also a testament to the values that define us: empathy, dedication, and a commitment to fostering growth. Together, let us continue to write a story of progress, where every child's dream is nurtured and every mind is ignited with the flame of knowledge. As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of the causes we support is education, helping to empower people to develop their mind. So we identified Ajay Comprehensive Senior High School. With support of the government, we were able to get access to the school. So what we did was to help them set up an ICT lab that has 21 computer. We also had 21 workstations. We provided them with 9 kVA solar inverter system and air conditioning system. We renovated the hall that houses this ICT facilities, and also did some renovation at the school.
About 4 years ago, I always dreamed of having a befitting ICT laboratory for my students. Today, I would say it's a dream come true. I want to say thank you very much to Cardinalstone.
At Cardinalstone, we firmly believe that quality education is the key to unlocking a brighter future for generations to come.
This laboratory is going to help me and my colleagues to learn more and go deep in technology.
I would say thank you so much to Cardinalstone who have provided us with this great opportunity.
Thank you, Cardinalstone, we love you.
We also journeyed to Modupe Cole Memorial, where we discovered another vital need, a school closet that held the potential to be transformed into a sanctuary of inspiration.
For Modupe Cole Memorial, just walking into the hostel prior to the execution of this project, everywhere was in disarray. The children didn't have wardrobes, their nets were torn. As little as these things may sound, just ensuring that the project was able to renovate the hostel, provide these wardrobes and fix the nets, we believe that this would improve the well-being of these children.
Good evening, ladies and gentlemen. On behalf of Cardinalstone Partners, I have the singular honor and the privilege of welcoming all of you to this event. It's called Cardinalstone Investors Conclave. And I went to the dictionary to try and find out what is the meaning of conclave, just to be sure that I know what I'm getting into. But by the time I found out what a conclave is, I already accepted to be here, so there was no need to change. I couldn't make any change anymore because I understand it's a bit of a secret meeting. In other words, For all of you who are here, you are those who've made so much money this year on the stock market that you can afford to put yourself together and lock the doors. And in whatever currency terms, I'm sure you still finish off very nicely by the end of the month. So I see a lot of smiles around in the room, and I say thank you very much for coming, everyone. Our valued clientele and, of course, our distinguished panelists for this very important event, the first on the calendar for Cardinalstone Partners in the new year 2024. To kick off, may we all rise, and I will have a band over there that will give us a rendition of the anthem of the Federal Republic of Nigeria. Please, may we all rise if we can to the anthem of the Federal Republic of Nigeria. Please be seated. And thank you for that very beautiful rendition, the Cardinalstone Partners style. And I want to say a very big thank you for bringing us all together, the founding partners of Cardinalstone Partners, Mr. Mohammed Garba. Thank you very much for being here this evening. Please take a recognition, Mr. Garba. Thank you very much for coming. Put your hands together for him. Mr. Michael Unzewi, please. Thank you very much, one of the founding partners. Femi Ogunjimi as well, who is also here, I'm sure. Yes, thank you very much. And Yomi Jemi Bewon, thank you so much for coming. Yes, and of course we have Shali Somoa. Shali? Okay, Shali is here. And of course, Elile Olutimai, thank you very much. Thank you, madam, for all of you for putting this together. Of course, Investors Conclave 5.0 means that we've had the first, the second, the fourth, and the fifth. But the one we're having this time around seems to be the one under fire, in the manner of speaking. So it's very opposite when the theme for this evening's event is reforms, beyond reforms, strategizing to boost collective growth. The first question that comes to my mind as a journalist is that, are we done with the reforms yet, or we're still doing more reforms? Do we need more reforms? But with the reforms that had been carried out, what can we do to engineer collective growth? But let me say a very big thank you to all of you for being here, and in particular, online participants who have logged on since about 4 o'clock and waiting for us to start on the physical side at this location. Thank you very much, every one of you who had logged into this particular event. Remember, we'll have a Q&A session after the initial presentation, then after the panel presentations as well with my 5 panelists, and then we'll take a few questions from here and from our panelists and participants online. For those who are participating online, please remember to use the Q&A button on your device, whether it's a laptop or a tab or a handheld, whatever it is, just find that. And this is the QR code to view the event agenda. And of course, it's the Cardinalstone Investors Conclave 5.0. And of course, you can go on Cardinalstone website, official website as well. And if you want to do investment into any of our funds, please. The last time I checked, there's no free lunch in Freetown. So Cardinalstone needs the investment. So we want you, please, to also invest in Cardinalstone, whether in the Cardinalstone partners or any of our subsidiaries as well, the registrars, the stockbroking firm. By the way, give Cardinalstone a round of applause. We got this award, and I'm the one blocking it. Yeah, this was the award we got at the Nigerian Exchange just towards the end of last year, and I was
I have a few thoughts penned down, so I'll just go quickly. Good evening, distinguished ladies and gentlemen. On behalf of Cardinalstone Partners Limited, I warmly welcome you to our Investors Conclave 5.0. Your presence here today is truly appreciated, and I commend each and every one of you for prioritizing this event amidst your busy schedules. Throughout the years, our efforts in organizing this annual gathering has resulted in an expanding community of loyal attendees comprising industry leaders and seasoned professionals. Their presence and active engagement continuously serve as a testament to our unwavering commitment to delivering value to the investing community in Nigeria. With the Nigerian economy gradually opening up due to more market-oriented policies, the country has sustained its bullish position in the equities markets and is increasingly becoming an attractive investment destination to many foreign and local portfolio investors. Cardinalstone was a huge beneficiary of positive investor sentiment in 2023 as it closed out as the #1 securities trading firm on the exchange, having traded over 400 billion naira worth of trades on the exchange, and it's a position we've held 2 years in a row. Banking earnings saw new highs in H1 and Q3 2023 due to the implementation of pro-market reforms and proactive net long dollar positions across the space. The Apex Bank has communicated plans to keep monetary policy tight to rein in inflation and to stabilize the naira. These monetary policy initiatives and bold reforms on the fiscal front, such as removal of the subsidies on PMS, serve as a compelling backdrop for our discussions today. This conclave of economic and business thought leaders is strategically timed as companies are setting the tone for their strategic objectives and initiatives for 2024. Our primary objective is to facilitate insightful discussions and provide a platform for addressing pertinent economic developments. We hope that today's engagements will unearth valuable strategies to boost collective progress in Nigeria's ever-changing business landscape. Given these considerations, we have thoughtfully curated a diverse panel of experts who will provide valuable insights into various sectors within the economy. Our event theme, aptly themed Beyond Reforms, Strategizing to Boost Collective Growth, aims to delve deeply into tactical approaches that can propel growth and drive positive change in the Nigerian economy. Within the given time frame, we will delve into the intricacies of the banking and financial services industry, examining the evolving trends and innovative approaches within the sector. We would also explore the power, oil and gas, and hospitality sectors, analyzing their respective contributions to Nigeria's economic landscape and identifying opportunities for growth and investment. Furthermore, our discussions will extend to the significance of free zones and their alignment with Nigeria's growth agenda. The manufacturing sector in Nigeria would also be a focal point of our discourse as we assess the current state and potential to enhance its contribution to the overall economy. By engaging in comprehensive discussions across these sectors, we will aim to give a holistic perspective on Nigeria's business landscape, foster collaboration, and develop strategies that will contribute to the collective growth and prosperity of our nation. After the panel session today, We will provide an opportunity for questions, insights, and comments, allowing us to benefit from a wide range of perspectives from industry leaders and seasoned individuals gathered in this room today to ensure that a comprehensive discourse is had today. Additionally, we have organized a networking cocktail, which I strongly encourage everyone to attend. The session presents an opportunity to build on the conversations during the panel discussions and forge personal and business connections. Once again, I extend my heartfelt gratitude to every one of you present here today. I'm confident that you will find today's engagements actionable, relatable, and insightful. I once again welcome you to Cardinalstone's Investment Conclave 5.0. Let us embark on this journey of knowledge, collaboration, and growth together. Thank you for listening.
Thank you so much, Oyebuchi. As the saying goes, never send a man to do a woman's job. So she's done a very proper welcome address to raise the curtain for what promises to be an exciting time, bringing economy, business, investment, and the markets together. But for me, having spent most of my career in journalism, in the markets, I'm a friend of the market, and I'm part of the market in the manner of speaking, so I am one of you. But I think what the Cardinalstone partners have done is to start this Conclave 5.0 by putting together well-researched set of data, statistics, and information that can help us get a sense of where we are going in the new year with a bit of background of 2023. So I'm going to ask Olaoluwa Boye to lead this part of the presentations to get things started. And then with the rest of his team, then we'll take a few Q&A on what has been presented. And after that, we'll move on to the keynote address. Then after that, we'll take on the set of panelists who will speak to the various sectors and broadly across the various parts of the economy. So let me, Olaoluwa, you have the floor, please. Please put your hands together for him. Thank you.
Good evening, everyone, and you're welcome to Cardinalstone's Investors Conclave. We're happy to have you, and I trust that this presentation will be exciting and help to inform your investment journey. But before we go into the investment conversation and the research conversation, I would love to throw it out there for us. The reforms that have been battered by this government have brought diverse impacts to the economy, and it begs the question, between the dollars and the PMS price, pump price, which will get to 1,005 first. So it's basically what we're going to consider here today. It's part of what we're going to see and how we can take advantage of what the government is doing. To start with, please, can we have the slide on the screen, please? We can move to the next slide. So to start with, the global economy was pretty much challenged last year. A combination of tightening monetary policy and as well as slowed growth, slowed consumption across the continent of Africa and as well as developed markets, dampened sentiment in that space. So basically, we saw the Chinese market being dampened by its property market. The property market in China contributes about 25% to the entire GDP in China, and we saw that they've been in crisis over the past 2 years. We also saw that the euro area, which is pretty much big, also contributed to the major slowdown that we have. But despite this slowdown that we've seen from major quarters, the US surprised positively. And that was largely on the back of elevated or healthy consumption that we saw from the populace. Consumption accounts for about 60% of activity in the US economy. So overall, the economy grew slower compared to what we saw in 2022, but it's pretty much outpaced analyst expectation. And that has begged the question on what we should expect this year. Are we likely to see improved economic activities? I would think that 2024 will still be challenged, similar to what we saw last year. For one, the US economy that surprised positive last year is likely to face some challenges. During the heat of COVID, the US economy built up this large savings buffer because you don't know what will happen next. However, following recovery from COVID, we've seen that savings depleted materially, and we think that that could have a bit of negative pass-through to consumption, which means that the economy could also be challenged next year. Aside from that, the China market continues to grapple with the issue in the property market, and that dynamics is unlikely to change anytime soon. Hence, we think the combination of both is likely to make the global economy slightly lower than what we saw this year. For inflation, last year rather, inflation came down materially from the multi-decade heights that we saw in 2022. But 2023 inflation is still pretty much high. When you compare it to pre-pandemic levels, it still shows that prices are relatively high. Monetary authorities continue to hike, they continue to tighten, all in a bid just to rein in inflation. 2024, inflation will still continue to dip, similar to the pattern that we saw last year. However, just like you are seeing on this chart here, it will remain way higher than what we've seen in pre-pandemic level. But the market has anticipated a very quick rate cut. From engagement that we're seeing in the market are already pricing in a possible rate cut even from the first quarter of the year. But we think that dynamics will not play out as that. If you look at the last inflation numbers that we saw from the US numbers pretty much outpaced analyst expectation. That gave us a sense and a thought that most likely hawkish rendition will likely persist in the first half of the year, while monetary authorities could stand pat on interest rates in the second half of the year. So for us, global economy will remain challenged, inflation will remain above pre-pandemic level, monetary authority will maintain this hawkish disposition in H1, then H2 we are likely to see either a stand pat or gradual rate cuts. Moving on to the domestic front, the interesting thing about the Nigerian economy last year was the economy was grappled with the policy and the reforms that was initiated by the government. We saw prices touch 27-year high. The impact of that weakened domestic consumption. Domestic consumption is about 60% to 65% of the entire Nigerian economy. The cumulative impact of the policy, currency devaluation, we saw that consumption weakened and that dampened sentiment. For us, we think that when full year numbers come out, we are likely to see 2023 full year growth at about 2.6%. But 2024 will likely be promising. For one, we think that consumption will likely improve. We are seeing the private sector increasing wages right from the third quarter of last year, and there's expectation for the government to increase the minimum wage in 2024. If this pans out, then we should see some pass-through to consumption. Consumption benefits should have a direct impact on the trade sector, the real estate sector, and some other major sectors in the economy. Aside from that, the oil sector has been in recession over the past 4 years. We think it's time for that sector to exit recession because the government has continued to intensify its efforts to curb oil theft. Aside from that, the government is taking conscious efforts to resuscitate dormant oil fields which have been left by foreigners. As at 2021, which is the latest numbers that we have, the total oil fields that are dormant in Nigeria that have been left by international companies are about 200. So we think that if this can be revived, then we should see some positive pass-through to the economy. And last, government is looking at offshore oil exploration. This is pretty much expensive, but it shields against oil theft. Hence, we think that the oil sector could deliver about 7% growth in 2024. Other sectors that are likely to perform is the ICT, which should drive activities in the services space. I would think that consumption will do well. Agri sector was crippled this year because of last year rather, because of the Naira redesign. We think 2024 will be a recovery. But on this side of the PowerPoint, right, the economy, the government is targeting a $1 trillion economy over the next 7 years and a $3 trillion economy, $3 trillion economy over the next 10 years. It's pretty much ambitious, but is this achievable? We try to play in different factors and different scenarios that can give us a sense of what can be done. It's pretty much nominal GDP, where you have inflation, where you have exchange rates, and then you have the value that Nigeria can create. We made 2 assumptions. We said, one, we think that over the next 7 years to 10 years, inflation will go back to long-run average, right? And that's about 17%. And then we also think that there's a bit of leg room for Naira to remain stable. So we're looking at going forward, I'll be looking at a devaluation of about 5% annually. If these two views hold, the Nigerian economy will need to grow by a minimum of 7 to 8% annually over the next 6 to 7 years for us to be able to achieve a $1 trillion economy. And here are some of the things that could help us to get that value, strong commitment to reform, the free trade area, Dangote refinery, Lekki free trade zone, as well as the possible rebasing of the GDP. In fact, the rebasing of the GDP in 2014 almost doubled the economy. The economy increased automatically by about 84%. Let's move to the next slide. The story is around the fiscal side of story for Nigeria. There's been a lot of debt sustainability concern in the African region. We've seen in 2020 we saw Zambia defaulting. We saw that in 2022 Ghana struggled, and of late Ethiopia. And that is bringing back the memories of what happened to Mozambique some 10, 15 years ago. And it's begging the question from investors that for Nigeria, should we be worried? Are we likely to see the possibility of a fiscal crisis in Nigeria? When we try to look at the key metrics that gives us a proper analysis of this, which is number one, the debt servicing to revenue. Number two, debt to GDP numbers. Number three, the composition of the Nigerian debt. Number four, the duration analysis of the Nigerian debt. Number five, the exports, the reserve coverage ratio. Now, looking at all these indicators, currently Nigeria is struggling with just one, and that is debt servicing to revenue, which is about 100%, close to 100%. But for other indicators, we are outpacing what we see in other African countries, SSA peers, and even we are competing with some emerging market peers. The benchmark set by the IMF for all these metrics, Nigeria is pretty much outpacing them. Yes, we know that debt numbers continue to rise because of the ways and means securitization, and as well as because of the impact of foreign exchange conversion on foreign debt in Nigeria. But notwithstanding, Nigeria still seems to be in a comfortable position. And there is a bit of impetus from this government to drive revenue. They are looking to improve tax revenue. We've detailed this in our reports. I won't love to bore you with that, where you can catch up with some of these things that we mentioned. Moving on to the next thing, which is on inflation. Inflation is currently, like I said, the highest point we've seen in 1996, 27-year high, right? And three key things is very important when explaining Nigerian inflation. We tried to check an analysis for 30 years, and we discovered that 50% of inflation over the last 30 years in Nigeria can be explained by money supply. Secondly, 25% is attributed to FX devaluation, and then the last is idiosyncratic risks that we cannot attribute any specific factor to, which means there is more of diverse factors. Now, money supply currently is at the highest level we've seen on record, and that we think is partly contributing to the elevated numbers that we have. Aside from that, energy costs, inflation, the devaluation all contributed to the rise in inflation that we saw in 2023. 2024, we think that inflation will remain elevated, well above the long-run average. But there might be a slight moderation when you compare it to 2023. I would think that this will largely emanate from base effect, basically. Nothing serious, nothing special. While we understand the government, the monetary authorities are trying to rein in inflation, we think that inflation will remain elevated. They've guided, that's the CBN, that the inflation target for them, they've been having conversation around inflation targeting. They've come to a conclusion that the inflation target for Nigeria is about 21%, about 21.8%, which is close to our own forecast of 22%. Aside from that, they've guided that they will continue to hike interest rates. A report came out recently by Bloomberg this week that the CBN would likely do about 500 basis points, come the February meeting. We think that we are looking at about 100 to 150 basis points for the year, basically, right? And the monetary authority, we like what they are doing at the moment, the fact that they are taking conscious efforts to bring down inflation, and as well as to tackle issues like backlog, to attract foreign investors. We like that. So for us, inflation will remain high. 100 to 150 basis points from the monetary authorities. And then on FX, which you think is a big elephant in the room, currency remained pretty much pressured. Last year, we saw almost 50% currency depreciation, the highest that we've seen in a year on record. And in fact, the currency depreciated more than the parallel markets. We barely see that, right? I would think that part of this pressure is because of the illiquidity of the FX markets. The foreign investors that didn't come back that were expected, all contributed to this pressure that we saw last year. But 2024 could bring a bit of hope. While we expect currency to remain pressured, while we are forecasting about 1,000 levels by the end of this year, we think that the current account position is suggesting that there is a bit of comfort. One, Nigeria will likely experience improved current account position because we think imports will likely reduce next year. Dangote refinery is coming on board. That should reduce the magnitude of PMS and other oil-refined products that we import into the economy, which should help to reduce the outflows of dollars from the economy. Aside from that, we think that the oil production we're expecting to improve, and the still elevated oil prices, cumulatively should support the current account position. So overall, FX will cross 1,000 by the end of the year, while current account position should improve. In terms of foreign inflows, do we think that foreign investors will return this year? The CBN has cleared about, I think close to $3 billion in backlog, and they've shown commitment to clearing other backlogs. We think that if they're able to clear all these existing backlogs that we have, and they improve liquidity in the markets, we've gotten funds from Afrexim Bank. The Minister for Finance came out recently that Nigeria could enter the Eurobond market, and we are still expecting other line of sight fund. If this can happen and Nigeria can improve FX liquidity and as well as supply, maybe back or close to pre-pandemic level, where we used to do about $3.2 billion on a monthly basis, then we should expect a positive pass-through to the currency and as well as provide a bit of comfort for foreign investors. But then we'll try and watch, we'll continue to watch and see the disposition that we see from foreign investors. And then we have the last slide, which just shows our forecast and our summary for the bull, bears, and bear cases across different key indicators of the economy. Thank you all for listening. At this point, we'll take questions.
Please give Oboye a very resounding applause. You can't beat data. And when you have an organization with so much robust enterprise of humans and other resources from within, I'm sure Oboye and the rest of his team will be ready to take your questions. Again, I love the projections and everything looks very nice. I think we'll do 1,000 to the dollar. That would be good. I want to see more productivity from not just the oil sector, from the non-oil sector as well. And I'm going to take a bit of that to Dinesh and the rest of his team and others who will be my panelists later. But then we want to take a few Q&A from what we've heard so far from this presentation. Again, for those who are online, please use the Q&A button to send in your questions. I haven't seen any questions yet from the from online. If you have anyone in the room, please indicate you have a question for Olaolu and the rest of his team in the research department, and then we will take it. Okay, well, I think we have the first question. We have a few roving mics, please, for our guests. Thank you. Please kindly just indicate your name and preferably your organization. You don't need to mention how much portfolio you have under management. Just.
Okay, good afternoon, and thank you so much for the presentation. My name is Wale Ajayi from KPMG. Okay, I like your optimism, about the growth in GDP, right? But I don't share that optimism, right? And I will tell you why. I'm trying to understand, the basis for the projected base rate in GDP. Right? And I guess when I look at it, I'm trying to understand the drivers, for getting to that rate. Because the way I look at it is this. You've talked about the debt to revenue service ratio, right? You've talked about the amount of debt that is piling up. And the question is, of course, is where are we spending the debt on, right? We look at how much is being budgeted for capital vis-a-vis infrastructure. Capital is not the same thing as infrastructure. We're spending a lot of money on capital. And I'm saying to myself, where is that going to come from? And then in the midst of the security concerns that we're looking at in Nigeria, and then you look at the trajectory of what we've done in the past. Yes, in terms of production, you've talked about oil production, right? It's going up, right? It's not so much as in opening up, short fields. It's about the oil field practices being maintained by the oil producers, and our evacuation routes are not efficient, and nobody is saying anything about that. So maybe in terms of oil production per barrel, we probably will get close to about 1.3, and you had condensate of 300,000, 1.5, maybe. Oil price is going up, I do understand that. But when you look at the social economic factors that we're facing, the headwinds we're looking at in Nigeria, which I'm not sure, the security issues we're facing in Nigeria, which I'm not sure whether you factored in, then I dare say for me, the way I look at it is that, yes, we did well last year, but I think maybe base rate for GDP will probably be under 3%, not above 3%. And looking at those factors I've spoken about, I would like to hear your thoughts, especially on the social economic factors and the security issues.
Okay.
All right, thank you very much. Just, if you allow me to just add, because I got a question from online from Folarin Olusegun, and just to add to the crude oil story, when we talk about production levels, security around evacuation of this oil and the pipelines, even though some of these assets are going offshore right now and they're living onshore. So the question from Folarin is, please, what is your outlook on crude oil price for 2024 and the likely impactors? So is oil staying at 80? Will it go to 100? Will it come to 60? Whatever, whenever somebody's shooting someone somewhere, whatever, anywhere in the world, what would that mean? Just add it to that particular stuff.
Okay, thank you so much. To start with, our optimism does not negate the challenges or the idiosyncratic risks that we're facing. We clearly acknowledge and even share most of your sentiments. For example, despite the fact that we're expecting the oil sector to grow at 7%, our oil projection plus condensate is 1.55 million barrels per day, which means clearly we are still underperforming to what we used to do 4 years ago, 5 years ago, where we used to do 2 million barrels per day. We clearly understand that the oil sector is still challenged. There is oil theft crisis there. There is issue with foreign investors still leaving. So clearly there's still a lot of work that needs to be done on that space, right? And so we are not totally negating that. All this was factored into our model, into our consideration. And if you decide to assume non-oil production constant from what we saw last year and this year, I think about 2.2%. If we decide to hold it constant, that everything in that space is being held, is frozen, nothing happens, and then you push up your oil production slightly, projecting 1.55 million barrels per day to 1.6 compared to 1.5 million barrels that we had in 2023. Because of the low base, it just jacks up your growth, slightly, right? It jacks up your growth. Aside from that, don't forget that Dangote Refinery is coming on board. We were there last week, some of us in the team. We saw the project that has been done there, and from our engagement with the management, YPMS production is yet to start. They've begun preliminary production for AGO, for jet fuel, and the likes. When Dangote Refinery starts operating at optimum capacity, let's say about 80% capacity utilization to 90% capacity utilization, we think that Dangote Refinery has the capacity to add a minimum of 1% to the Nigerian growth GDP, right? We know that we cannot work at 80% capacity in 2024, but we can see a minimum of maybe 30 to 40. If you do the math, we can imagine what we will add to the number. So yes, the numbers might look a bit, like you said, optimistic, but the numbers are suggesting that, but we also understand that there is a lot of crisis that needs to be done. We are not doing adequate spending on infrastructure. When you compare infrastructure spending in Nigeria compared to what is obtainable in North America, it's mind-blowing. In North America, for example, infrastructure spending across board, money, that's North America and Middle East. Infrastructure spending, just only infrastructure, not the entire capex now, is somewhere around 40% annually. when you compare it to 40% of the entire budget, compare it to Nigeria, which, we are way below that level. So we clearly understand those challenges. And on the second question, Bayo, you want to speak to that?
Yes, thank you. All right, so the second question was speaking about oil prices. And so our view for oil prices this year is that we think that oil prices will remain elevated at current levels. And, our view is based on the fact that a lot of, OPEC cuts, first of all, are aimed to help, ease the challenges with oil prices in current times. As supply begins to reduce because of OPEC cuts and demand remains at current levels, that's enough to pull up the price of crude oil. Also, if you consider the current challenges that are going on the Red Sea, with Houthi militia, those geopolitical challenges that are currently ongoing, those are also factors that we think have been considered, and those things are not going away right away. This has been since the end of last year, and they're still ongoing. So we think that these geopolitical factors still play a major role, in deciding, the price of crude oil. So overall, we think that crude oil prices will remain at current levels. Already today, I think it has already crossed about $80 per barrel, and so we think that it would really pretty much remain at those levels for the most part of the year, barring any major shocks to the oil market. Hope that answers the question. Thank you.
Thank you very much. I think we have another question in the room. Let me go to the ladies first, if you permit me. You say that men rule the world, but women rules those who rule the world. So the question is, who really rules the world? Madam, you have the floor.
Good afternoon. Thank you very much for the presentation. My name is Tosin Ojo. Saya Kabra. So, if your base to your best case were to play out for the year, what would be the 3 most important variables that you would focus on?
Sorry, please, can you say again?
If your best case, your base to your best case were to play out for this year, what would be the 3 most important variables you will focus on? And what would you advise government to do to improve those variables?
Okay, interesting. I think that the biggest thing that the government will need to look at is the situation of FX. Cardozo was talking earlier in the week and was saying that the Naira is undervalued, which technically suggests maybe he is expecting a bit of appreciation in the Naira, right? So we think that focusing on FX will be key for them. Having to maintain FX stability is pretty much key. So if you check 2019, 2018 levels, Nigeria was doing at about 3.5 to 3.3 to 3.5 billion dollars on a monthly basis to intervene in the market. We think that the market has been clamoring for a market-reflective exchange rate where the hand of the CBN and the government is not there. So we think that focusing on that front will be a big one. Secondly, socio-political issues, right? Like he rightly mentioned, there is a bit of concern here and there, policies, some that are being played out in the oil and gas space. We've been on this PIB thing for a while. If the government can focus on that, it will, it will be a fantastic one. Maybe looking at Dangote refinery and the benefits that we can, gain from this. All these things are part of some of the, the key points that we need to watch out for.
Thank you very much. I think some of the folks who are online, just a second, very quickly, are worried about the fact that, and this is a question from an anonymous attendee. I don't like anonymous attendees unless he's bringing money into any of the mutual funds. Then I don't mind. But again, the question is, it says a brilliant summary and insight. So I must start with that commendation in black and white. It said this reform's impact upon will help to industrialize. How will it help to industrialize the reforms that have been announced so far? How will they help with industrialization drive we've been hearing for decades? Then he ends up putting his name, even though he says anonymous attendee. But I'm not going to read that because he said it's anonymous.
Can I use this?
Hello, good evening, everyone. My name is Philip, the Chief Servant for Research in Cardinalstone. So I think that's a very important question. Industrialization. It's all about trying to drive the development of new industries, maybe sub-industries, reforms, drive more or less catalyzing a lot of opportunities across board. Now you look at the oil and gas reforms, the passage of the petroleum industry bill. I think first the decoupled, you have host communities, you have other sub-components of the bill. And then you also have the subsidy removal, right? Or as some people will argue, maybe partial subsidy removal, but then it's some step to progress or to pro-market initiatives. We think that, for example, could unlock a lot of opportunities across the different spheres of the oil and gas space. Speaking to the downstream space, I think the last analysis we did, trying to compare what is obtainable in markets where you have full liberalization or more complete deregulation relative to countries in like Nigeria, where prices or where there's a regulation essentially. You discover that there's a 200 to 300 basis point difference in terms of margins for downstream business. So when you open up the market and then you allow demand and supply to dictate prices, you get that those within the value chain are likely to be better incentivized, and that would drive a lot of activities. You may see some more downstream players spring into action. Then, of course, align or supporting Dangote refinery, right, with policy initiatives to make the environment a bit more friendly. And, of course, trying to also push forward the Port Harcourt refinery simultaneously. What that will do is improve competitiveness in the midstream space, which is also very positive, right? And it could also drive further businesses and setups, right? Then for upstream, petroleum industry bill, we think it will eventually, drive a lot of positive investments, particularly for offshore. We know that we have a lot of issues onshore, but then offshore, they are relatively safer. So with more clarity, with more accountability, and of course, with issues of host community now coming on to front burner, we think that we may likely see a lot of positive development in that space. We think that all of these could drive positive development in the oil and gas space. But then away from the oil and gas space, we are seeing efforts to actually unify the currency. We know we attempted that last year and we essentially came out with a black eye, in quotes, right? But then it is efforts to achieve progress, clear efforts, right? We believe that doing something is far better than doing nothing, essentially. You should be seen to be moving, to join in the moving train, essentially. So we think that the current administration and the monetary authorities, they are essentially looking for ways. They're exploring different options to actually free up that space or liberalize that space, which is likely to catalyze a lot of activities in the manufacturing segment. For long, manufacturing has been let down, in quotes, by FX illiquidity issues. A number of firms across the manufacturing space have been unable to actually source their entire dollar need from the official markets, forcing them to parallel markets where currency is not necessarily priced at fair value. So that has been a material disruption to business. So trying to rectify that through policy is likely to encourage a lot of new players in manufacturing space. It's not going to happen overnight, but then these are little baby steps towards progress. So eventually, medium to long term, we think that if policy is steadfastly followed, diligence in terms of execution, we're likely to see greater industrialization that would be profitable to the entire country.
Thank you very much. A round of applause for Philip and Olaolu and the rest of his team. Just a few more questions. I've got this gentleman holding the microphone for quite some time. I have more questions in the room. Now the folks with the deep pocket.
Thank you. Hi, my name is Samson from Xerox Investment Management. I have two questions, one on monetary policy and the other on the current account impact of the Dangote refinery. On monetary policy, you've mentioned inflation targeting a couple of times. although when I look at the current monetary policy arrangement, I struggle to see the ability to achieve that. And what do I mean? The fixed income short-term market is still largely bifurcated. There's still ad hoc CRR regime, which makes the OMO and the MPR transmission pretty much broken, right? So when you talk about increase in interest rates, it's sort of meaningless unless you address those issues. I'm trying to understand how credible is that 21.4% inflation target at the end of the year, which the central bank governor spoke about. So that's the first one. The second question is on the current account impact of the Dangote refinery, because people seem to be looking at it from a production perspective and not the net effect, because unless we grow our oil production, there will be a net on the crude that will need to supply the refinery. So if you can help me quantify how significant that is on the current account, that's useful. Thank you.
On monetary policy, I think that is a very interesting question. And we will get more light to answer that question in February. I think it's February 26th. Everybody is waiting for the MPC. I guess we are all anxious. So I think that will provide a very good basis. They've talked about inflation targeting, but then the modus operandi of a lot of the things they want to do, we don't know, right? So I guess we get more clarity on that. Then in terms of the net impact of Dangote refinery, I think we visited the refinery 2 days ago. They talked about a net $9 billion savings annually. That is their own estimate, right? But then we know that I think crude-related imports has approximated in excess of 12-13 billion annually, right? So, of course, you would have to account for the fact that Dangote refinery now becomes an off-taker of our crude. It's only the nets that will be exported, right? But we think that we could gain or benefit from things like from savings related to maybe freights, right? Freights and other import-related charges. That's where the gain is likely to come. So nets, we don't want to put a figure to it, but we think that it's going to be net positive essentially. But it's going to come from mainly savings related to import-related charges, right? But then it's clear that they're also going to be off-takers. We'll be able to export the net crude, right? So I think what we have to do as a country is try to more or less look for ways to engineer real growth in outputs. 1.55 is nowhere close to our capacity. I think we have 2.5 million barrels per day capacity. Of course, without necessarily bridging OPEC quota or ETC, right? We should look for ways to actually push that. And that will come by trying to resolve the security-related issues, in the Niger Delta, the aging infrastructure across the space, right? And of course, try to push more implementation on the Petroleum Industry Act, which, like I said, was decoupled, broken down. So I think all of those essentially will help to boost outputs, eventually.
Yeah, thank you so much. We have just about 5 more minutes for the Q&A, so I'll take 2 questions very quickly. But if you want more oil blocks to come on stream, we're doing about 22 oil blocks right now, about 200 idle blocks. Owen is here from Transcorp. She's going to pick up about 10 more. She's here to make some announcements of about 10 more oil blocks, and that will give you additional 200,000 barrels per day. Put your hands together for Owen, please, one of my panelists. Thank you. The Group Managing Director and CEO of Transcorp PLC. Thank you very much. I recognize quoted companies first, please. My bias for the marketplace. Okay, I have 1 or 2 more questions. We'll make them just about 30 seconds. Let me take the gentleman in front, and then I'll take you, madam. Yes, and then we'll move on to that very little break. It's going to be 10 minutes, but I'll cut it to 5 so that we can move on quickly to the panel. Thank you. Then we'll have a keynote presentation, by the way. Do we have a microphone for, sorry, let me just give this to you on loan.
Okay, thank you, sir. My name is Debo Lukombi Chevron. So that depends. So very quickly, and thanks for your presentation. there seems to be just a lot of focus still on just one part of the economy, and that is oil and gas, right? We need things to encourage other parts. You mentioned manufacturing briefly, but it still went towards foreign exchange, which I think is really needs a change, because we have quite a lot to go with backward integration into not depending so much on foreign exchange, importation, right? So I would have liked to see a lot more on other sectors of the economy. It's a wide economy here. We talk about oil and gas. The last evaluation, it was 9% of the GDP. So we have, what, 91%, which we're not focusing on. And you get the same thing in the media. You get the same thing. We can talk about oil and gas all day. If you give me a chance, I'll break it all down. But we have a very big economy. What is the impact and the encouragement to those sectors that you may not mention, but you could suggest for policymakers to focus on? And there are several models worldwide. We saw how the Chinese came and did it, what the Indians have done. So just speaking to this and encouraging the discussion, the discourse more on those. Oil and gas, we have, trust me, we have that covered. Even the concerns on production to Dangote refinery, and it's all well covered. It's not going to have that deep, right? It's just low. The forex is being bought in forex, and the forex just stays in country. We're not paying some external person to supply that that money, so that's covered. But the rest of the economy needs to be addressed. Seriously, thank you.
And I agree with you completely. I'm sure Owen's here is going to talk to oil and gas, but more hospitality and leisure. Transcorp Hotels got about more than a dozen awards last year, globally speaking. And I was tracking them and moved from about 19 naira to almost at, how much? 23, 24 to 100 plus. So hospitality and leisure, a whole lot that we can cover. Agriculture, value chain, and a whole lot more. So I'm sure you have a whole lot. But I think my panel look at oil and gas, look at special economic zones, special agro-processing zone, manufacturing industries, and the banking sector as well, that we seem to, as the engine part of it all. So I'm sure you want to give a few more. Madam, please, you have the floor very quickly, and then we have the break.
Okay, good evening. My name is Ore Shofetin of Foothold Advisors. My question is very similar to Debo's. You focused a lot on oil and gas. What do you think of the power sector reforms that the government is trying to do? Are we doing traditional? Are we going renewable? What would that impact be on manufacturing? Because most manufacturers will tell you they spend way too much on petrol and diesel, and it's making them less competitive. How do we increase productivity as a nation? Because without that, you can have everything in oil and gas, but then if people don't have jobs, they can't work, they can't improve their livelihoods, they can't pay for education, and they can't do so many things. So what should the government be doing, or what should we as Nigerians be looking forward to based on what the government has announced? Thank you.
Okay, thank you very much. That's another question I would like to take cue from my able moderator. We have a very carefully assembled panel, and they will address the issue of power. But I'll just say the recent passage of the Power Sector Act is something really very interesting. I think two things are key. One is to drive competition in this space, healthy competition. Of course, that will lead to better value for stakeholders across board, right? And you would likely see a lot more improvements in generation, because now individuals, states, and institutions can now participate. So I think those efforts are likely to really unlock value, right? I would like to say, I was telling some people, few persons sometimes ago, that it may not be coincidence that we also saw a lot of interest in the stock market for power stocks, power or energy-related stocks. So people are seeing these opportunities and are trying to key in. And of course, policies and efforts like this may take some time to actually, begin to, you must pass through that initial teething phase for different policy initiatives. But like I said, we have a very carefully selected panel that will do justice to all of these questions, these non-oil sector questions. Trust me. By the end of the day, you'll be very glad that you came. It's a very powerful panel.
The folks here, they are hunting for money, they know. Because the power sector, the BP is just talking about the sale of about 5 of those IPPs, and they're looking at about 1.1 billion US dollars. So the gentleman from Chevron is not only interested in drilling for oil, he's looking for power. So he's interested in that, $1.1 billion. So I'm sure things are beginning to happen. You know, the markets say, buy on rumor, sell on the news. You understand what I'm saying?
Absolutely.
So you can see where the questions are coming from. But just a quick one for you from the managing director at Hekin Private Office. How to ensure convergence between parallel and official rate. Maybe Lalu will take that very quickly, then we'll have that.
I think I can just quickly take that.
Okay.
You want to drive convergence. Very easy, increase supply. We've achieved it before. 2016, 2017. I think at 2017, we saw a very wide disparity between parallel market and official rate. How did we resolve that? Increase supply. Straightforward. So you have to try to drive initiatives that will boost supply. Look for ways to incentivize foreign providers of capital to come in, right? Try to maybe look for low-hanging fruits. I think I saw several economic publications. They say the lowest hanging fruit that we have is crude production, right? But it just seems this low-hanging fruit, we are not just getting it very easy. But then it's a low-hanging fruit. Look for ways to resolve security situations around oil-producing areas and try to maybe take oil production closer to 1.6, 1.7, right? That would be a potential support, you know, for FX in terms of supply. And of course, do things that are likely to drive interest in Nigeria, right? Make sure as much as you can, right? There is a lot of transparency in the FX market. I think a lot of things border on transparency. People have to trust that the system works. And I think it was one point I got from the governor of the central bank's remark at the NESG summit in Abuja. He was talking about trying to codify processes, make processes very clear, carefully document and share, you know, the processes so people understand the modus operandi. When people understand, can see that the initiatives are working, and of course they can track progress, then of course you boost confidence and they would want to do more business with you. And of course your rates and every other thing has to be attractive, obviously. Right, so
it's a lot work in progress. Please give your round of applause to this team of. Thank you very much. Thank you, Philip. Thank you, everyone. Thank you, Laulu. Thank you, everyone, for a job well done. I think there's a whole lot that we're going to need to hear at the MPC meeting, 26, 27 February. I think it's a meeting everyone will be hanging on every word coming from Cardoso and the rest of his team. And I think there's a whole lot. Right now, there's about between 12 and 15 central bank guidelines on FX that haven't been touched since the new administration came into office. They have to be cleared up. We need to have clarity on a number of issues on some of the extant regulations and directives, as it were, in terms of FX. So all of these have to be cleared up once and for all, and a single message to the market: who does what, when, how, what the processes are, all has to be on the table. So February 26, 27 will be a very major key date for all of us to hear from the central bank on both economy and the markets. Let's quickly have this 5 minutes. It's 10 minutes on the agenda. It's going to be 5 minutes. Again, for folks online who are spending data and all of that to join us, unless Cardinalstone will be refunding them because it has a large pocket. It's the largest stockbroker by value on the NGX last year. Well, let's have some very nice, very soothing. This team is here that played that very nice national anthem, The Natural Way. Then they're going to give us about 5 minutes. You can quickly use the loo and come back. In 5 minutes, we'll have a special presentation, a keynote address that will be delivered by a very distinguished individual who's been set to speak to us at this Investors Conclave. Thank you very much. If you gentlemen give us about 5 minutes, and then we'll just quickly, please make sure we're back in 5 minutes, please. If possible, don't leave the hall. Thank you. Stay in the room.
As we celebrate our 15th anniversary, we are inspired by the words of Nelson Mandela and have embarked on a heartfelt mission to give back to the community that has supported us in our journey.
One of
Distinguished ladies and gentlemen, I think we can return to our seats, please, ladies and gentlemen. Distinguished ladies and gentlemen, please let's take our seats. Thank you for the interactions. That's all why we're here. Thank you very much. Let's take our seats and continue from here. As we said, to take our keynote address for a few minutes, less than 10 minutes. It's a keynote address that has been designed to spice up a little bit the conversations and then get us to hear more from the government side, one of the very important government agency in the entire conversation or discourse around economy, revenue, and all that has been assigned to speak with us. Please, those who are outside, could you please come back into the room? Thank you very much. We're not doing badly with time, so we want to keep this as timely as possible. Please, let's re-enter the room, ladies and gentlemen. Thank you very much for...
Please, can we all come back in? Hello.
Thank you very much. May we please return to our seats in the room as we pay attention to this keynote address, and that will just be a prelude to the panel discussion. So let's take our seats. Thank you, ladies and gentlemen. And the keynote address was designed to be delivered by the Executive Chairman of the Federal Inland Revenue Service. And when you have the FIRS deliver a keynote address, and then, of course, I'm sure you have an idea of what the objective is. The idea is to harvest as much revenue and tax from everyone in the room. Now, when I was given the notice of who was going to speak, well, I was comfortable that it was the Executive Chairman of the FIRS. Then I got a notice that it's going to be represented by someone. And I said, that's fine. But then the man who was sent to represent him is the head of department and the director in charge of telecommunications and broadcasting department. And I said, Boston, you're in broadcasting. So this is a message for you directly. Please put your hands together for Mr. Shegun Sosimi. Please come to the podium, and please do not make any announcement of tax on the broadcast industry. You can deal with the telecommunications, but then please, we are happy to have you here representing the Executive Chairman of the FIRS. Thank you very much. We'd like to listen to his message.
Good evening, ladies and gentlemen. Cardinalstone partners, the executives of captains of industries present, ladies and gentlemen. Thank you for making my job easier, because I've been wondering. I've been listening to investment talk. People want to put their money where their mouth is. And the keynote address is to talk about fiscal policy, revenue, and revenue. So I'm like an Englishman in New York. I'm an alien here. So the chairman is delighted to be invited to this program. We are also having the FRS Strategic Management Retreat going on in Abuja. It started for the week. So he realizes that being part of this program keys into his cardinal objective. And so I have to jump to the available flight to be here. And when I came in, I told the lady that I've still been panting because of the turbulence. So, but I think I'm more much relaxed now. And the is to talk about the how the fiscal initiative and policies of government will drive economic growth. And the earlier presentation talks about the projection for GDP growth in the country at 3.56 for the year. Last year, or let me say in 2022, revenue, FRS collected about 10.4 trillion in taxes and revenue, unprecedented, and there's already a direction. In 2023, the revenue collection grew to over 12 trillion. And prior to those 2 years, it's always been hovering between 4 and 5, never up to 6 trillion. So reforms that have been going on seems to be delivering dividend to the country. Now, but at what point, like you said, beyond reforms, at what point do you stop to reform? It's been reform and reform and reform. When the new administration came on board, they inaugurated another reform, fiscal policy reform committee headed by Mr. Taiwo Yedele. And there we go again, reform. But because of that, the government have set a target. The revenue target for 2024 is about 19, that's global, 19.413 trillion. Now for the FRS, it is 18.68 trillion. Now, the GDP growth arrangement is 3.56. The revenue growth projection is over 64%. So, he said, I should tell you that he has his work well cut out for him. Unfortunately, it's just came on board. Now, the Fiscal Reform Committee has been mandated to address 3 critical areas, 3 main pillars. One is fiscal governance, the second one is revenue transformation, and the third is economic growth facilitation. And to set the ball rolling, they also put out 3 agendas to how they're going to deliver. So within the first 30 days was to bring quick wins, which has been presented to everyone. I'll go through that. Well, within the 60 days phase, 60 days period, when they are to outline the critical tax reform areas to achieve the set goals and objective. And within for the first 365 days, that's the year, to come up with implementation plans to deliver the set goals and objective. So, now, when we talk about growth in the economy, basically we are looking at increasing the gross domestic product. And that has been happening over the years. But the challenge we have is that, what's the base? Because when you have a base that is low and even if the world is doing, the likes of the developed worlds are doing 2%, 2-point-something%, when yours is about 3-4%, it's still very insignificant. So how do we drive the system to get to a double-digit economic growth? And it's happened before. When we look back to some years, the Nigerian economy grew in double digits. until lately when we started doing 2%, 3%. And really, it won't take us to where we need to be. So we have the revenue angle in fiscal policy, and it's a double-edged sword because there's also the incentive angle area. We can't drive revenue and say we want to collect all the revenue in this world, and at the same time provide the incentives. They don't work together. Though the ultimate aim will be to drive growth. Expansion with investment and with incentives drives growth. It expands the economy. Same way, revenue for infrastructure development and stuff also drives the economy. So how do we achieve that mix that will deliver the desired growth projection? Also, it's important for us to align the fiscal policy measures of the government with the monetary policy measures, because it's been a challenge over time, and it's the same government. So those are issues that the fiscal reform team is looking at. Also to reduce multiplicity of taxes and get rid of some nuisance taxes that are collected that we are unable to account for. So between 2020 and 2023, there were some drivers that were put in place through the Finance Act. And you're all aware that we increased the VAT, because the National Tax Policy document says that we should shift from direct to indirect taxes. So we're not looking at putting pressure on income, but trying to get consumption to be the indices for revenue growth. So the federal government increased the VAT rate from 5% to 7.5%. And you know the story. Prior to that, it was all about the fact that we were running the lowest percentage in value-added tax or general service, the goods and services tax, whatever it's, I mean, what connotation is used in any part of the world, ours was the least. And it cannot sustain the economy. We hear a lot about consumption, a lot of happenings in the fintech industry, the telecommunications industry, but does not translate to revenue for government. Why we increased that, there were some other measures put in place to cushion the effect, like companies with less than 25 million turnover were asked to pay companies' income tax at 0%, and they were also asked they were informed not to invoice VAT, because the pressure of running after them to collect that VAT was actually becoming more expensive than what they were returning to the coffers of government. And for those that we classify as the medium companies who have above 25 million to 100 million, they reduce their tax bracket, income tax bracket to 20%, while we retain the 30% for companies that are large taxpayers. Also, the Finance Act sent out, also brought some incentives to companies who are willing to pay their taxes within a specific period. For those companies that are in the medium sector, where you pay your taxes and file your returns before your due date, some days before your due date, there's a bonus that you can net off from the taxes you pay. That's 2% for the medium companies and 1% for the large taxpayers. I'm sure the group MD of Dangote knows what it means to get 1% bonus from the tax for the period. So then there was also the drive for taxation, minimum tax in the country. This minimum tax arrangement is such that, so you see where you see my direction now. You're talking investment, I'm talking tax. But when I finish, I have to tell you it pays to pay your tax. So permit me to go in this direction. Minimum tax. Before the Finance Act, we were taxing capital. It's applicable to companies where the tax you pay, when you have taxable profit, is lower than the minimum tax. So it's a race to the bottom. So we'll take the minimum tax. It's also we were using percentage of paid capital. That was ITMA, the Act of 1960, that we're using until that reformation came. So we're taking a percentage of paid up capital. We're taking a percentage of net assets. We're taking a percentage of gross profit as benchmark for minimum taxation. And so it doesn't make sense. And that's why the government now says, let's do it based on your turnover. But it's not that it has to be based on your turnover. It's only applicable where you fall into that bracket of race to the bottom, when your tax payable is just too low and there's a minimum benchmark. And for foreign companies that operate here, when they even pay that minimum tax and they report to their country, home country, they will benchmark it against their own minimum tax. Yes. And if it's not commensurate, you pay the minimum tax for their operations outside the country. Insurance companies had a lot of benefits with this reformation, a lot, because the Act was taxing insurance in a separate way. But with that reform, they also keyed into this issue of uniform application of the tax laws. Then what about think capitalization? Where companies used to do fund their businesses with debts as against equity. So what came up in the Finance Act was to run what we call 30% of EBITDA, any before interest, tax, depreciation, and amortization, in such a way that, yes, you can continue to finance with debt as against equity, but there's something that we're checking. So, and we feel it will drive people to look on the side of equity and not continue to run with debt. Nigeria is running on debt fine. And that's why we feel that for us to get this growth that we require, we need to look at our internally generated revenue, domestic resource mobilization, as against debt financing. Debt financing happens all over the world. But where your debt is a killer, the economy cannot survive. And we know what it is about our debt. So 2024 fiscal outlook. When the reform team submitted the first report within the first 30 days, they talked about how to use technology to drive taxation for purpose of efficiency. They also talked about improving the economic condition of businesses through granting reliefs for tax payments. Recall that value-added tax was removed on diesel, 0% on feed gas for all proceeds, compressed natural gas, and imported liquefied petroleum gas to be subjected to VAT at 0 level. That's complete exemption. Now, where companies are encouraged to pay their taxes in Naira now as against even the provision of the law is that the currency of transaction should be the currency with which you pay your tax. With that, with the recommendation from the Reform Committee, if you can source for Naira, pay your tax in Naira rather than put yourself under undue pressure of sourcing for foreign currency. And it's part of what is putting the pressure. I'm not saying taxes, but it adds to it. There were lots of comprehensive review of the tariffs on the government unbanned 43 items from assessing forests. We're all aware of that. And the fiscal policy review of some items prohibited by, for import, majorly to encourage companies within the economy to boost local production. Now, we have some arrangements that we are presently doing that I need to run you through, which is what we call this new initiative of withholding VAT. For value-added tax, everybody used to be appointed as agents of collection. The first step, So the first step was to reduce, remove the informal sector largely from collecting VAT for companies that have below 25%, 25 million. And government realizes that there are some organized sector that we can use, just the way we have source deduction by oil and gas companies and government. If you do any VAT transaction with the government agency, they won't pay you. The same with the oil and gas company. So it was extended to deposit money banks, that wherever you invoice VAT to any deposit money bank, they take at source. And also extended to some mobile network operators, the Airtel and MTN. And believe you me, it worked wonders. This 12 trillion that we're talking about, there was rapid reduction in VAT leakages, because it was as if we were giving freebies all those years. And that's one area that government is looking at to increase the number of organized sector that will help with the value-added deduction, such that people don't just take government money and go with it, given the level of our technology development. Okay. Now, the chairman said I should talk you through some of the initiatives that is brought on board in these few months. And the first is that there's a change in the vision statement and the mission statement and our core values, though the objectives and goals are still the same. The usual mandate by law, by legislation for the FRS is to assess, collect, and account for taxes accruable to the Federation. That's been the mandate, and it's not willing to deviate from that mandate. So, because lately, there has been requests for corporate social responsibilities from the FRS, and for him, it's largely a deviation. So the new vision for the FRS is to be one of the world's foremost efficient and trusted revenue service. As a new vision, to be one of the world's most efficient and trusted revenue service. The new mission is we are committed to fair tax administration through responsive and accessible service to optimize revenue for national development. To the core values, basically we're looking at professionalism, collective responsibility, integrity, efficiency, and fairness. And all this will build on three pillars: people, technology, and process. All right. So you agree with me that the keynote address of the Executive Chairman is a complete, is setting another tone for discourse here. But that's the message. Thank you, Cardinalstone, for what you do, and wish you all the best in your future. And thank you, everybody, for listening.
Thank you very much, please. We appreciate that message from the Federal Inland Revenue Service, the Executive Chairman. I was the only one who passed him a very little piece of paper, and I hope I won't get additional tax charge for doing that. So I hope the program of event does not have my name nor address on it. So I think I'm covered. If I get a note, I'll share with all of you. But let me just quickly move to the other side of the hall to invite my panelists, because we need to gain on time very quickly. Please let me move in here very quickly and take the first seat and invite my members of the panel. Let me start with Owen. Owen Omegiefo, please step forward. Put your hands together for Owen, who is the Group Managing Director and President, the Group CEO of, please take him center seat, of Transcorp PLC. Let me also invite Mr. Adegbite Falade, who is the CEO at Aradale Holdings. Thank you very much, sir. Thank you. And we have the Group Managing Director of Dangote Sugar, Ravindra Singhvi. Ravindra, thank you very much for coming. Thank you. The CEO of Access Bank was also billed to be here, Roosevelt Obona, but unfortunately he's unavoidably absent, but he sent a representative in the person of Madam Sumbo. Yes, who is the group treasurer at Access Bank. Sumbo Latunji. Madam, please, yes, step forward. Thank you very much. And finally, to complete my team is the representative of Dinesh Rathi, who is the CEO of Lagos Free Zone, and he also sent Karma. I'm trying to get the, let me get Ashish. Ashish, you're here. The CFO, the Chief Financial Officer. The time for the discussion is really short, so I'm going to just shoot straight out of the blues in a manner of speaking. And I'm going to start with Mr. Falade in terms of your thoughts on, in your opinion, what areas of the policies do we need to improve to ensure we have a positive impact that could be felt by the various stakeholders in Nigeria as we see some of the reforms that were announced over the last 6 months. Let's start from there.
All right, thank you. And thanks to Cardinalstone for having me be on this panel. My name is Adegbite Falade. Aradale Holdings is an energy company integrated in the value chain from upstream to midstream and to downstream. So you'll pardon me if a lot of my perspectives takes its root from that space. And I think it's very important because today the biggest challenge we're facing is a revenue challenge as a country, and more so even in terms of generating forex. And my industry plays a very key role in that. And so when we talk about policies, I'm going to go a bit back before the pronouncements under this particular regime, because they form a continuum to shape what we see. What is more important today is what is more topical today is the policy around the deregulation of the PMS and also the unification of the exchange rate. But for us specifically, we need to step a bit back to the enactment of the PIA which is the framework for driving value creation and revenue in our space. We're in a bit of a bind in our industry. It's not a coincidence that practically off the gate when the PIA was enacted, we witnessed a raft of divestments. It's not accidental. And there's a message there. And when you look at how revenue has dwindled for us as a nation, and especially in an industry that contributes as much as 85% of our forex earning, I think there are some much more deeper lying themes that are not being paid attention to, and which I'm hoping that in this sort of conversation we can spotlight it and hopefully provide a ray of how we come out of the woods. So our industry has been dominated by well-recognized facts that evacuation remains a challenge, and because evacuation is a challenge, is a major reason why today we're doing about 1.3 million barrels as opposed to 2.5 million barrels that we did in 2005. When you look at the delta of what 1.3 million barrels of oil, especially in a price-strong macro situation we are in, compared to what 2.5 could have been, you see a lot of problem. But it's not just about the fact that we are challenged along the lines of evacuation. I mean, today when you look at how our industry is configured, it started with the majors who built long transmission pipelines to the terminal, which is the point of sale. Over time, as things evolved, those pipelines, some of them single pipeline system, 400 kilometers long, became very difficult to police. How do you police and secure a 400-kilometer pipeline that passes through hundreds of communities, passes through land, passes through swamp? So a major challenge is we need first to secure, but not in the sense in which we're used to, where it's about putting men on the line. It's about how do we deploy technology to give us a better coverage. But how do you also reconfigure our evacuation architecture, that it is not built on just one single line that runs through many production centers and becomes vulnerable at some point? Now, it's not just that our production has stepped down from 2.5 million barrels to 1.2, 1.3. We need to even take a closer look as to where the curtailment is strongest. Because within the period of 2005 to now, our aggregate production from deep waters have increased significantly. And so a lot of what we're losing in terms of production is coming from onshore. Onshore is governed by different fiscals than PSC. And government take is highest with onshore production. And so we are finding ourselves in a situation where, for the first time in the recent past, the contribution coming from the oil and gas sector as a function of dividend is almost zero. When you look at the government take, the bulk, in fact, as at 2022, and to a large extent in 2023, more than 90% of government take is as a result of PPT, royalty, and those other charges that are in the industry. We're getting nothing from equity barrels. So it's not just about restoring the production, because you can do a lot of restoration from deep water production. Where we are most impacted is in the onshore areas. And this is the area where the majors are exiting.
Indigenous oil firms now coming into play there. And just very quickly, if you can just sum that from in a minute or less, would that be a game changer for us? Is that the new horizon?
So it will be a game changer depending on how we configure the industry. Today, that onshore, so please let me speak to a second aspect which is not very apparent, especially with our revenue. The biggest money spinner for us in the industry to government is our dividend from NLNG. More than 60% of the gas that goes to NLNG is from those onshore acreages. So it's not just that you're losing your revenue from export revenue, the associated revenue from NLNG is also being lost. Now, the coming in of the indigenous can help to arrest that, because what we're dealing with are above ground issues that are very local and probably too local for the international oil companies, which is the reason why they are exiting. However, there are still some adjustment that needs to be made in terms of the overall architecture to even make the indigenous to work, because you've now balkanized a monolithic system to separate systems which, being worked on their own discrete individual basis, does not give you the economies of scale to achieve that production, especially when you don't have somebody actively dealing with the irritating issues of insecurity in those areas. I think I'll pause for now. There's still a lot to unpack here, and they are directly related to revenue. And I say that by saying, for us, it's not just about the recent policies of the PMS deregulation and the exchange rate. The exchange rate has a massive impact on us because our products that are sold domestically in terms of gas and refined products, some of us are into refined products, we are taking significant write-down because of the exchange rate loss. And it's affecting our capacity to continuously being dollar-denominated investments.
Closely related to your industry is where Owen sits on top of the conglomerate that is Transcorp, and then you've got the oil and gas, the power. But if you just speak specifically to the power sector in terms of the reforms being talked about, the whole new set of privatization that the new administration is looking to achieve in that space, if we can have a competitive environment, and if we have a single competitive electricity market, and how will it all really work out in terms of the new horizon to deliver power that will help industrialization, that will support inflows from FX and all of that?
Okay, good evening, everyone. My name is Owen Omogiafo, the President and Group CEO of Transnational Corporation PLC, Transcorp. First of all, well done to Cardinalstone. It's nice to be amongst friends. I'm going to come from a very interesting perspective. For those who know me, I'm an unrepentant optimist. Unrepentant optimist. And that's because if I can't see opportunities, I will only see challenges, and then I cannot move one step, because all I'll be terrified. We've seen the reform in the power sector. We had the Electricity Act that was passed in May. If I recall, that was actually the very first act that Mr. President signed as soon as he came in.
Correct.
Prior to that, we were under ESPRA that had been there since the privatization, and to some extent it was lifted from what India had done. Are we there yet to Nigeria in terms of policy? No. Is there any country in the world that is there yet? No. If we're even following the US elections, it's quite interesting. We know that there's absolutely no country across the world that has it figured out. It's just like the way we are all navigating adulthood, learning it one day at a time. But if I look at the act, the Electricity Reform Act, we see the commencement, and I use that word carefully, the commencement towards the liberalization of the sector. We see that states, individuals, companies can now generate, license generating bodies. There is some move towards the transmission, because whilst, yes, we need to generate more power, we need to get it to the end user. And perhaps more importantly, end users, can you please pay for your power? Please? Can you please pay for your power? And this is part of what the changes that we need to do. there needs to be a little bit more of social education in our country. As a child born and raised in Benin City, those days there used to be a lot of radio jingles, NTA, BTV, that's Bender Television back then, that will tell you a whole lot about what was being done and the role that you played in it. Pay your taxes, clean up your gutters. Every Saturday, no, not every Saturday, every last Saturday, environmental sanitation. God help you that you were not doing your sanitation. Who cared how rich you were? We have different policy interventions. But policy interventions would only be policy interventions if there's no implementation. A lot of times we do economic analysis and everybody leaves the sociological impact. Therein lies the problem. Why you find that we come up with this fantastic policy that people like Philip and Co. and Michael, you guys would have gone to do all the brain work, but you bring it out and you find that you have challenges. So we had the Electricity Reform Act. It's come up with a few things. One of them as well I'm actually quite happy about. Taking a leaf from what's been done in the oil and gas sector, we're having a community development, community investment fund. And sometimes you ask yourself, why do we need to legislate these things? Don't you know that when you do well as a business, that you should do good within the environment that you grow in? Don't we know that? Yes, we do. But the reality is that sometimes there's a reason the law exists. The law is there so that people should do what they are supposed to do, and if they don't do it, they get punished. But I welcome this change. I also look at the empowerment of the NERC, National Electricity Regulatory Council, which we saw at the beginning of the year. It was an interesting beginning of the year in Nigeria, where there is more focus on regulating the entire value chain of the electricity markets. It will interest you to know that NERC is very involved. So if you saw me looking, I typed a few, I was just typing something. One of my CEOs told me he wants to shut down one turbine, right, to do maintenance. I did a rough calculation of how much am I putting on the grid right now. If I shut down that turbine, I'll be below, and I don't want Alhaji Garuba calling me or the vice chairman calling to say, Transco, how far? We don't have power. That's what we should be looking at. How do we implement the policies? Because really, to be honest, it's not so much about the policies. But I really want to say one thing real quick. There was a question you asked before. Sorry, it's not my question. But it would be remiss of me not to. I know we are all, yes, people are leaving and so on. So, let's ask ourselves that. How about us also looking at the opportunities within? Once upon a time in this country, banks were run by who? If you remember, banks, what was their history? They were foreign owned. I think Union Bank was Barclays before. Even UBA had French, First Bank, all of them. Yeah. Today, we have these fine institutions. We are holding our own on the world stage. Looking at the oil and gas sector, the divestment move started a long time ago. It's not today that it started. I'm very proud that one of the companies in my own group, Airs Energies, is the one that bought OML 17. And what have we done in that space? The way we've increased the production is phenomenal. And then you also look within our group. We're we're Nigerians running Nigerian assets for the benefit of Nigeria. So let us continue to look out for those opportunities that happen in such situations. Thank you.
Thank you so much, Owen. Thank you so much. I wouldn't want you to shut down the power because I'm sure Ravindra Dangote Sugar will need that power. So you've got the microphone over there because, yeah, but you generate your own power. You're sourcing a lot of raw materials, but I'm sure you've had your fair share of the whole very tight macroeconomic environment and where we are right now in terms of naira devaluation, exchange, FX scarcity, and all of that. So if you push forward from 2023 first half, second half to where we are today, what's your outlook in what lies ahead in how you will try to resolve the issues of FX and how it impacts your raw materials and at the end of the day, what the consumers like myself pay out of my pocket to get that sugar into my cup of tea or coffee? Okay, yeah, you got it. Thank you.
Good evening, and thank you, Cardinal team, for inviting us and giving us an opportunity to be among you. So, as Ma'am has said, and your presenters are also very optimistic. I also quite optimistic about the various things. But yes, you have raised the issue of the Forex, which is really a burning issue in Nigeria. So, Forex is a challenge for companies who are dependent upon import of their raw materials. I would say that all FMCG companies, their 80% of the cost of sales are all import based, directly or indirectly, right? Even if we buy from Nigeria, our vendors are importing through some other countries. So this is a very big challenge for all of us. But at the same time, I would rather say that the Forex market has opened up. Willing buyer, willing seller. The spirit is quite good, because if we work with this spirit, at least we can have the right costing on our table. Unfortunately, for last 2 years, the CBN was giving us at their own rates, and we were working on the rates, official market, official rates, CBN. Unfortunately, when the devaluation happens, we were all taken by the shock, and we have reported billions of naira into losses. If you look at by September end, 9 months, many of the companies, be it Nigerian breweries, Cadbury, Nestle, Dangote Sugar, we have lost billions, maybe 350 billions in last 9 months. Having said that, we are facing these challenges as of now, because the unifying of the rate, although spirit behind the policy behind the unification is there, but still the difference between the parallel market rate and the official rate is almost about 40 to 45%. Every day it is changing. Today I heard that the naira has crossed almost about 1,410. So the situation is really very grim. We are looking at, we are watching at, we are strategizing, but the foundation for this whole challenge is that how do we go to the self-sufficiency? We cannot remain dependent on importing raw material all the time, because Nigeria is the largest market in Africa. 220 million people. Importing food, FMCG, is not at all a solution. 50% of Nigerians are unemployed. The solution lies in the self-sufficiency, in the creating own capacity. Backward integration projects. These are the areas where we need to work. We need to change our policies to align with the Nigerian needs. I have heard so many things about oil, gas, everything. But I have not heard anything about agriculture. Agriculture is the foundation for any country. If you change your narrative to agriculture, that will provide jobs to the millions of the people, that will spur the growth of industry, that will revolutionize industrialization in Nigeria, solve the problems of the Forex, solve the problems of the unemployment. It will bring prosperity. We don't need to talk in dollars. We don't need to talk outside currencies. We need to talk in our own currency. All solution lies with us, but only we need to change our policy parameters, our narrative, that what are our priorities. Nigeria has beautiful environment. It has good water resources. It has good soils. What we need to do to align our fundamental requirements, where perhaps we are missing. Our Dangote group, I would say, because we are out and out manufacturing and agriculture industry. Our focus is very, very high on agriculture. All companies which I am heading sugar, our aim is that how in 10 years we should reach to self-sufficiency. Today we are importing 90 to 95% of sugar in the country. How to reach to the zero level by 90, and maybe in 15 years, how to turn it around to be an exporter of the sugar in the country. So that is our vision. We have done it. It is not that something we are experiencing or we are not doing it. What has happened to cement? If you look at 15 years back, the cement was imported in Nigeria. What is today? The cement is exported. Same thing is happening in the petrochemical, oil, gas. What is happening? Maybe in next 2 years, 3 years, the country will be exporting. So same way, if we do in agriculture, we change our focus, I'm sure many of these problems, what we are talking about, we will not be talking maybe 10 years ahead, all these problems. We might be talking of the growth of 7 to 8%, 10%, double digit, all these things. I'm from India. I have seen the same days, 30 years back, in 91, 92. Let me take a little more time, please.
Thank you.
Maybe. In 91, 92, India was having only 1 day foreign exchange reserve. That was the lowest ebb of the Indian economy. At that time, we opened up the economy. All the parallel markets were abolished. All officials, regulations were abolished. The way the recent bold initiatives which this leadership has taken, that is the requirement of the day. We have to realign with this requirement because we have to bring openness in the market. Let the market forces work towards it. Then automatically things will change. Initially you will have pain, but this pain will convert into your solution. So that has happened with India, that has happened with China, that has happened with many other countries. Secondly, today, our focus, everybody is talking that our import is very high. But I don't see anybody talking about the export. Let import happen, no problem. Our import is only 11% of our GDP, which is not very high. It is very, very moderate. But our solution is let the import happen in a big way. But focus on the export. Change the narrative. We are not talking about the export. So if we don't change our narratives, change our priorities, then we will be struggling with the currencies, we will be struggling with the unemployment, we will be struggling with the challenges what we are passing through. So my focus and my aim and our group aim is that how to make Nigeria self-sufficient in whatever industry we are working. That is our aim. And maybe like what we have done in cement, you will see it someday in sugar, you will see someday in petroleum and other areas where we are working. Thank you.
Thank you so much, Ravindra. Thank you very much. Very passionate. And I'm sure the free trade zones also, they come here very handy. And I'm sure you spoke about agriculture and the help that Nigeria is getting, for example, from the EFDB, building those special agro-processing zones in 22 states across the Federation. I think that is very good. The government wants to do more in terms of free trade zones so that we can begin to have export windows. Now, in terms of where we're coming from, the Lagos Free Zone, your insight into the 2023 period and how much of the policies that we have on track right now align with your objective, what you're doing, and how much challenges you're facing and trying to overcome them in the new year as you have more competition coming in as the government wants more free trade zones across the country.
Thanks everyone. I represent Lagos Free Zone. First of all, let me thank Cardinalstone for having this event successfully and having the 5th conclave for their investor. Free zone are the concept like Nigeria. I would say that free zone concepts are pretty young. They were just formed in 1992, that is 30 years back. And if you see historically how other countries have been able to get the benefits of free zone, countries like Dubai, China and all have all flourished basis on the free zone consignment. But I would just change our narrative a bit. I would not name it as a free zone, but I would name it as a special economic zone, because whether we are in a free zone or an economic zone, it's more of an industrial area. And in free zone, there's a misconception by everybody when we use the word free zone that everything is free. But in reality, that's not the case, because the kind of employment you generate
and the kind of rippling effect which this creates to the economy is huge. And what the government gives an incentive is just on the direct tax side. And I heard the FIRS person also talking about that the move is from the direct tax towards the indirect tax, because globally everybody has seen, and it's quite evident, that the proportion of direct tax to indirect tax is quite high, which contributes to the economic growth. So what incentives which a special economic zone today enjoys is only the exemptions from the corporate income tax or the direct tax. Apart from that, all other taxes which are applicable or levies are still applicable for a special economic zone. So they do contribute towards the growth of the economy in a drastic way. Now coming to the question like competition, I would say that at present the country has almost 48 special economic zone registered across the country, as compared to like China, where they have more than thousands of special economic zones, all progressing. So I would say that having more special economic zone is not a challenge for us, but it's more of a competition and work together to ensure that the right benefit with the country is due to have it is able to reap it. It's not a pro competition. Adding to Rajiv's point that we should focus on export, but to focus on export, we also need the infrastructure which is required, which I feel the country was lacking, having the current situations of the port and the infrastructure which is required to take the goods out of the country to other parts of it. And that's where I would say that the Lagos Free Zone in collaboration with the Lekki Deep Sea Port comes in, because that brings a new port infrastructure in the map of Nigeria, and which will help Nigeria to enjoy or to get the benefit from the export-oriented products, which can be an agriculture, as we talk, can first be used for the local consumptions, and the surplus production which are there can be easily exported out from the neighboring country. And in the long run, with the AFTA coming in, that is Africa Continental Free Trade Agreement, the port infrastructure and the logistics support will play a huge role in getting the right benefit for the country.
Interesting. Thank you so much, Ashish. Thank you very much, and I love that. But my last question this round goes to Sumbo, because Sumbo from Access Bank, you are the only one in the room that made money last year. The banks got so much money, apart from Cardinalstone, they made money on the stock market. You made so much money. You've got so much dividend, the central banks to say, look, don't pay too much dividend. But Cardinalstone Securities wouldn't like that. They want all the huge dividend to come in cash. Everybody need all the money on the table. But again, everyone on this panel, perhaps including myself, will come to Access Bank for money. Lekki Free Zone, Lagos Free Zone, Dangote Sugar, Aradel, OND. It's a whole lot of money. She doesn't come to you. She has a lot of money already. So I'm going to exclude her. So the rest of us need money from you. So the central bank is looking at, look, you need to recapitalize. We're looking at $1 trillion economy ambition. Who should recapitalize? The banks or the economy itself? In terms of which one should get a whole lot bigger in terms of recapitalization? Do you need $1 trillion recapitalization? Should it be broken into stages, 25, 10, whatever, 100 billion, whatever, 900, 1 trillion? What will take the banks to be able to support these industries? Oil, non-oil, and everyone else in between, entertainment, creative arts, agriculture, agro-allied, processing, whatever, to be able to support the economy itself and using the banking system. Put all that together for me in about a minute or two.
Thank you. Good evening, everyone. My name is Sumbo Latunji, Group Treasurer, Access Bank. Thank you, Cardinalstone, for having me here today. So I'll go back to your question. Yes, it's good to recapitalize the banks. It's very good. If you look at what you have now, the first 5 will easily pass. We may see some consolidations that will take place. But I believe the problem is bigger than that. The banks can be recapitalized to help us support the economy. But do you have the fundamentals in place? You don't. We need infrastructure. We need so much more to do to be able to support the economy. So you need to solve the real sector first before banks can really solve the economy, before banks can support. So yes, look, if you look at loan to deposit rates, they've been low. Why? Because you really cannot support. How many companies can you support? You don't have a lot going on. Infrastructure is not in place, high energy cost, security is a problem. How do you start? Those things have to be in place first before we can. So yes, recapitalization is good, but the banks cannot do all that for the economy. The federal government has to come in and do a lot.
So we need to recapitalize the economy first.
Yes.
Whichever way we're going to do it.
Yes.
Then the banks can become recapitalized. Because it's something I keep thinking about.
Yes, I agree with you.
Yeah, you need to have, if you have $1 trillion, but how do you get $1 trillion as a bank in Nigeria? Because the economy is not worth $1 trillion, by the way. So there's no money in the economy itself. So you banks don't have that much money, despite the fact that the treasury market, whatever, had been good. FX revaluation was good for you banks last year. Do we still have more backlogs to clear? How much is the size of the backlog that we have to clear, if you have a figure? But folks said there's about $30 billion in domiciliary accounts with you banks that are just sitting down and you can touch, and the government itself cannot touch because it belongs to all the guys in this room except myself. How do we get that money, that part of that estimated $30 billion from the domiciliary accounts and support these industries and these men and women here?
I wish I had a crystal ball. Then I'll tell you. So back to what you said. Yes, we have a backlog of about $5 million. Central Bank had settled $2 million.
$5 billion.
$5 billion.
Yes.
The Central Bank had settled $2 billion. Today they settled another $120 million. And what we estimate is that, well, hopefully, but within a month, they should have resolved all that and cleared the backlog in collaboration with
between
the
now and
banks.
the end of February, technically
Hopefully.
speaking.
So what we're hoping is that by the time we have the MPC meeting, that would have happened, which would now pave the way for, it gives us a lot more, there's like light at the end of the tunnel, and then we can move forward and see a lot more being done. Yes, we have dollars in $30 million or $30 billion or whatever you have in DOM accounts. They're customer funds. And if you see what has happened now, a lot more Nigerians invest in dollars. So those funds probably...
Like in Cardinalstone dollar fund.
Something like that.
Yeah.
Or the Access Bank account.
Oh, here we go. Now,
where you can also keep your funds.
I knew I was
in
looking for trouble.
Structures.
Okay. Pitch to me. I like that.
So you should come to us.
Yes.
Thank you.
Hold on a second.
Even Cardinalstone comes to us.
Here we go. Garba, here you go. But I think it's, thank you very much. And let's move on because of time. Owen, because Transco is so big, and hospitality business is one of your key areas. So you spoke about power sector, but let's talk about hospitality and leisure industry. Are there opportunities there? If I had bought Transcorp when it was hotels at 20 naira or 10 naira, I would have crossed 100 naira, whatever, at the end of last year, and I would have made a whole lot of money, but I didn't. Because by virtue of my job, I try to restrict so that I can see both sides so I don't do that. That's a personal decision. But are there opportunities there in that sector for the big deep pocket folks in this hall and those who are online to take advantage in the new sector? Do you think we'll be able to do a few things to open up that sector for investment?
So the hospitality sector, like a number of other sectors, there's opportunity. Just to give us an idea, Dubai, right? The first time I went to Dubai was 2008. Then the Dubai of that day, of 2008, and the Dubai of today, they're not the same. And if you follow how they've built it, so yes, they have oil. I mean, Dubai, Saudi, the oil they have, ours just looks like, no, it looks like King's palm oil. That's what it looks like. But you see what I find interesting, and I'm mentioning these two countries because last year I was in Saudi for an investor conference. And guess what? They have a minister whose job it is to drive tourism investments. They want to encourage tourists to come to Riyadh. And what they're trying to do is give Dubai a run for their money. I was just thinking about this. Was it yesterday or earlier today? I was having a session on one of my teams. And we're looking at our tourism, right?
In Saudi Arabia, because
no. That's what diplomats. I'm not there. I'll drink my water, please. I can't shout. But there's a lot of opportunities, and I want us to look at tourism as a gateway to other sectors being unlocked. When Dubai started, I don't know if you guys remember Emirates. They were almost dashing us these tickets to come to their country. They will give you free. You're traveling to London. They'll give you free visa to go into their town. If you're traveling something like, they will give you free hotels. They were all investments to use to drag us in. The last time I went to Dubai, I could barely afford to buy bread, not to talk of cloth. Because it's become such a destination of investment. Dubai demystified the Middle East. Do you understand? Dubai demystified the Middle East. And that is what tourism and hospitality can do for us. We have such a out there, which our own people contribute to. And I always laugh when I see my fellow Nigerians, the way we yab ourselves on Twitter and the rest of them, forgetting that the whole world is looking at what we're saying. We don't amplify good news about our country, but when it comes to bad news, my 100 Naira data is activated because I must comment. So let's look at our space. We have over 220 million people. How many five-star hotels do we have? For a long time now, been trying to win the Africa CEO Forum to come to Nigeria to do their conference. Since 2019, I've been on that thing, and I will not rest until it happens. And I said to them, West Africa took place in Abuja, May 2014. But I also know what the government at the time, what they did for that to happen. There's a lot of room. People tell me, oh, competition this. I say, you don't understand. What I'm looking for is a bigger pie. Transcorp Hilton Abuja, we are almost always at peak capacity. This year, we're going to start building our Lagos property, by God's grace. This year, we'll start it with a view to open the doors in 2028. Because we need quality properties in here. If you've also looked at, if you follow the Airbnb space, right? Have you seen the valuation of Airbnb? And how it also helped. Yes, some people say it has destroyed, it has increased property price too much. But it has also helped to create a value around a real estate sector that was previously unrecognized when GDP and all other economic indices were being considered. And hospitality, by the way, goes beyond hotels. There's a whole lot. We have ancillary industries from our restaurants, our entertainment, and we are growing so much. Please let me take a minute to praise my country, please. Rema performed. Rema, did you not see what he performed? What they call that thing? Corporate, the ballon. Have you heard that Burner is performing at the Grammys? Do I have invitation to Grammy? He will go on stage there. Let's not forget, for some people will shoot me. Davido has also performed. Because I know his fans are already waiting. But this is all part of that hospitality and tourism. And we're happy that for the very first time since we've now dedicated a ministry to it. I'm from Benin, as I said earlier on, and in case you've not noticed, I'm proud of that, just in case he has not come out. We have the great walls, the moats of Benin. We have our Badagry, the slave area, not pleasant history, still a part of our history. We have our museums. We have Olumo Rock, Zuma Rock. Do you know how much we can make from these things? You spend plenty money, we'll leave Nigeria, we'll go to Bath in UK to go and look at Stonehenge, the rocks in Stonehenge. You pay plenty money. You pay money to enter the baths.
Go to Inari Hills with more plenty stones.
But that also now goes to what you were saying earlier on about security. But I do believe that these things indeed can be addressed, but we're seeing the opportunity. Look at our waterways. Look at the beach that we have, the beautiful water. There's a lot of opportunity. And you know what I like about hospitality as well? There's a whole segment. We talk about our 220 million. But what we don't even dig deeper into is the fact that over 70% of those numbers are youths. We have a young population, which means that we have a growing market. I used to be the chief operating officer of the Tony Elumelu Foundation. And that entrepreneurship program, I have seen young people take their $5,000 seed capital and make it into, they've, go and look at their page. But they've created a lot of value out of it. And the thing about tourism, coming into that space is that you can always find something. The barriers to entry is not so high. You don't need to go to CBN for any license. You don't have you just don't have it. And we have all these young people that are very creative. Look at our skit makers. They are moving from skit to becoming actors. They're becoming musicians. And we just need to build this all together. But to close, please, we should brand our country. It's ours. If you say your house is not good, who will come to your house? Nobody.
Interesting. Thank you so much. Let me put in a bit in the oil and gas sector, Mr. Adebute. Is Aradel Holdings looking to list on the exchange? Should that is, again, because the government wants more companies to list on the exchange to get more oil and gas in. Everyone has seen the shares of Eternal Oil from that backwater performance 2, 3, 4 years ago, that Eternal Oil just making an announcement is going to be one of the truckers out of the Dangote refinery, and everybody is pitching into that particular stock and all of that. So is Aradel coming to the market? Would you like to see the Dangote refinery come to the market? How quickly do you think we should bring it in? Should it do dual listing, Lagos, London, Toronto, whatever? And how much more would you like to see from the energy sector as well come to the market during the second round of privatization in that sector as well?
All right, thank you. We're on a journey. Today we are traded on the NASD under the tracker name Aradel. And last year we ended up being the best performing stock on NASD with 458% growth. Year to date now, we've done about 40% in 2024. When we're on a journey to being listed, we will be listed this year on the main NGX exchange. We've started the process. We've been on that journey now for the better part of the last 4 years. But as you would expect, taking such steps requires a bit more in terms of your setup, of your corporate governance, and of compliance on several fronts. So what we've been doing is making sure in terms of compliance we're ready, but also coming on the back of very strong operational performance. Our industry is not blessed with many people that are listed, especially in the upstream. If you look amongst the indigenous, there's only one company that is listed, and that's Seplat. And Seplat has been able to enjoy the benefit of being a listed company in terms of access to the right type of capital, in terms of investors' confidence and all of that. We would be the second, well, let me step back. Oando is listed, but Oando came from a downstream listing. But when I'm talking about pure upstream play, it's Seplat. We will get listed this year. It's primarily going to be first on the NGX, and subsequently, as part of a program of activities, there's going to be a secondary listing on a foreign bourse. There's a lot that has to be done to bring companies like ourselves to the exchange. Not everybody is set up to face up to the scrutiny of the SEC, of shareholders, and when you consider that many of the independents started as being promoted by individuals or a group of individuals, there's still a lot that needs to be done in that space. But it's the way to go, because the sort of capital intensity that our industry requires goes beyond what friends and family can fund, and even banks. Banks are also limited. So for us to be listed is because that's the next stage, and we need to attract certain types of capital, especially the PFAs, and they are the ones that are holding the funds right now. So everybody, please get your checkbooks ready. We are the exciting stocks to buy. Exactly this time last year, we were trading at 185 naira. As of today, we're trading at 1,670, and we're still growing. So
I know you have your eyes on the 3,000 surplus. Exactly, and the other side. But Sumba was looking at you when you say even the banks. Give Sumba $1 billion, $2 billion for access. She's going to bring the money to the table. But if you guys are going to make any deal, make sure Mohammed Garba and his team are in the room. Don't get that together without him getting a share of the pie. But talking about FMCG, just to begin to round up my panelists, because it's dinner time already. In terms of how the government policies will impact the bottom line for consumers in Nigeria in the new year, in terms of how you'll be able to manage costs and not pass everything on to consumers, what are the strategies or things that you're looking at Dangote Sugar and across the industry that can help mitigate some of these problems that we have in terms of FX, Naira devaluation, weakness in terms of consumer pockets?
A very good question again. In the sense that we want to the solution provider to the country, not to drain the foreign exchange. That is our motto. So now you must have heard that we are merging our three companies, Dangote Sugar, Nascon, and Dangote Rice, which is not listed. So we want to create this group to bring up synergy, optimize the cost, and bring up a scale through self-sufficiency mode, so that we don't need to go into the forex, drain the exchequer by burdening through this way. So our aim is to provide affordable food to the Nigerian nationals. That is our motto. How can we make the food affordable and reach to the all nook and corners of Nigeria? We have developed our infrastructure across Nigeria. We have warehouses. Between the foods, we have about 2,000 trucks as of now. 2,000 trucks, and we have our own warehouses. So our aim is to optimize the cost, improve the efficiencies, and pass it on to the customers so that they can afford the food at a normal price, whatever is prevailing. So that is one aspect. And number two, as I said, that we are working very hard to ensure that imports are reduced every year on year by producing things here, or machinery, spare parts, our raw materials. We are working very hard so that reduce our dependency on the import and bringing spares and materials from outside. So that is one of our aim, which can not only contain the price, which can contribute reducing the inflation, because as we all know, the food inflation is much more than the normal inflation. What we are looking at, this inflation is only a nominal inflation. Food is 3 to 4% higher than the nominal, which is a very big contributory to the Nigerian economy. So our aim is that how to contain through this mix of merging the companies, improving the scale, and transferring all benefits of improved efficiency to the Nigerian consumers, so that at least they can the burden on the purchasing power is reduced. We all know that how the purchasing power is impacted because of the recent change in the policies and devaluation of the currency, which has put a lot of burden on the Nigerian nationals and which has also increased our cost of production. But we cannot control the international prices of the materials, but definitely we can control the internal cost, where we are focusing and how to pass on the benefit to the country as such. So that is our present way of working.
Thank you so much, Ravindra. I appreciate that. Ashish, you mentioned special economic zone rather than rather than free trade zones, and I think that's the model that Egypt uses in terms of special economic zones to just make it very different, whether it's going to be gas, whether it's going to be industrial manufacturing or special economic zones, and they just put everything behind them. So do you think that model can work better for Nigeria instead of just having so many free trade zones all over the place, and try to help us consolidate and power industrial manufacturing that could help in specific areas of the country? Do you think that would help? Is that a vision for you that you think we can do 3-5 years down the line from where we are right now?
I don't have, again, I would say that we don't have a crystal ball where which model will work. But definitely, like if you create the ecosystem which is required for any industry to flourish, and by doing a special economic zone and then by providing what is required for the ecosystem to work and provide the support for the industry to flourish, definitely the industry will flourish. Today we know in Nigeria, any industry which needs to go, they need to do their, I know Transcorp is there for providing power, but for all industry, they generate their own power. So in a sort that most of the industries operating are a power company. They have to depend upon their own services. So they don't focus on their core industry area itself, but have to focus on the other thing which take their attention. But if you kind of create an environment which gives them the confidence that you can come and do your core activities which are there, and let's be dependent upon by a power company providing you power, by a service company providing you other way the services, and you just focus on your own core activities of manufacturing which you have excellence in, you would definitely flourish and there would be no stoppage where you cannot. But if you focus on other activities, you would not be able to gain the synergies and you would not be competitive in the market. To be competitive, you have to be enjoy the synergies benefit.
Thank you so much, Ashish. And finally, Sumbo, apart from recapitalization, are there any of the existing reforms that we've seen, I mean, under the current administration and perhaps others that are coming up, that you think would help consolidate the banking sector a whole lot better, get investors to put in more money in the banking sector, make them better positioned to support the entire ecosystem of the real economy? Are there specific reforms that you're looking at Access Bank and within your industry right now?
Okay, so if you look at what has happened so far, we have the FX, where I know a lot of people feel the rates are not, you have a difference between interbank rates and the black market, parallel market rates. That's actually not the case. You have what the central bank has done, even though people may want to disagree, is the fact that you can actually quote whatever price. It is really willing buyer, willing seller. The only challenge you have is the fact that there is no supply. So the central bank has done all that they need to do. We can quote, under the previous administration, if you quoted at a certain price, you just get a call and someone is asking you, why did you quote that? Take it down. You'll be sanctioned. You don't have that. They've removed the 43 items. So you can import any, you don't have any restrictions anymore. It is willing buyer, willing seller, it's transparent, you have your range of bids. So what really, if you look at all that, you also look at what the central bank governor said. So he said some things. He said, you know, he looks at rates, everything being hawkish, interest rates going up. Like, you know, if you look at the economic review, they said 300 basis points, best case scenario. Actually, my best case scenario is that come 26th of February, we see 300 basis points increase in NPR. Yeah, and then you also, because let me tell you what you need. You need foreign FPIs. They come every day. They want to come to Nigeria. They want to bring in their dollars. Once you see some supply, while we're still growing our export market, you need supply to come in. What do they need? They need some stability to be sure that really, if you bring in your funds, you get your monies out, which is why we need to settle our backlog of $5 billion. That's one. Number two, the rates have to be high enough. So they are benchmarking us against Egypt, against some other climes where you have interest rates at about 20%. And the guys they actually know what they're doing. So even if rates go up to that level for a certain period, we would actually see we'll see exchange rates come down. So today, yesterday, the high for today was 1,336. NAFEM, that's what the high was. Parallel market got to 1,410, but CBN sold forward. So really, how much liquidity do you have at those levels? It's just momentum. People are just trading. There's no real liquidity at those levels. So if we see the supply coming, rates can be high for a short while. The CBN governor has said he's targeting inflation. He will see his inflation at 21.4 by the end of the year. We'll see things getting better. Another thing that made me happy was that the government wanted to take extra money from the central bank as ways and means. It was turned down. So even though we have some way to go, but there's light at the end of the tunnel. The central bank is still taking their time, but they are putting systems and structures in place. So like Owen said, I am an optimist. I see light. It will take time. It's a long process, but we will get there. So these reforms are good. We're feeling the pinch. Everyone is feeling the pinch. The good thing is no one wants to buy anything international anymore. You buy local. My dress was made locally. Nobody has any problems with that. You will look for local food to eat. Everybody is thinking of how to export things. What the CBN governor did last time, RT 200, was good, the former CBN governor. If we can let it continue, incentives to export things, then you're better off. So we have the policies in place. It's just, like you said, let us actually actualize, work them out, and then you see where we'll be.
Sumbo,
Sir.
When you talk about FX, everyone in the room listens. So what's likely going to be the exchange rate stability for the year? Triple digits, whatever digit it is. Because again, we're talking about realistic exchange rate.
Yes.
Some folks are looking backward at 500, 700.
No, we've left that either. For now.
Those days are gone.
Yes.
So
So
we're now at 1,000 threshold, like the index of the stock market.
Yes.
If that is the idea. So for 2024, is it realistic to everyone to say, look, don't plan anything below 1,000, 1,200?
So I think prefer to say between 1,000 and maybe 1,100. That's what I see. But still early days, right? January. Did you see what happened in Ivory Coast? The Eurobond they floated.
Yes.
Yes, oversubscription,
yes.
8.8 billion.
Yes.
The headlines, Bloomberg, finally, Africa is out of the dearth of Eurobond paper. Have you looked at what has happened to our Eurobonds? Nigeria started out trading at 13, 14. Yeah. Today, the 2026 Eurobond is at 9.06. The bid is 8.53 or something. So look at that. It's actually positive news coming out.
So you think that if you have big central banks like ECB holding rates, the Fed holding rates, maybe the Bank of England next week holding rates, South Africa holds interest rate unchanged today, you think somehow it will be easy for Nigeria to go back to the marketplace?
Yes, and if they intend to do that by later on in the year, and I'm sure they'll be oversubscribed. Even if you look at this, our debt, we keep saying debt. How much do we have? We have $1.25 billion maturing in 2025. Next is 2027. So how much we really can meet demand? We keep talking about how Nigeria is in dire straits. Nigeria, I don't know. I don't know what I've done. I don't know.
One house, this exchange rate issue, on a final note, please go ahead.
So we keep saying, things are tough. There's light at the end of the tunnel. Let's wait for the government to work out what they're doing. Yes, we haven't heard a lot from from the CBN governor, Dr. Cardoso, but we can see that he's putting systems, like I said earlier, and structures in place. At the end of the day, we'll have a central bank that works efficiently, and we would see the reward. So right now, it's hard, but there has to be some pain. Because there's light at the end of the tunnel, there has to be some pain. Because when we're going,
I love the part you take it, and of course yourself. We should talk naira. We should talk naira, not other currencies. Yeah, maybe because we mentioned the other currency too often becomes a problem. So let's change the tone. Thank you very much. Give you a round of applause to my panel members this evening. Thank you so much, Owen. I'm sure we took more of your time. Thank you from Aradel. And when you are listening on the main market, let me be the first to know. Ashish, thank you from Dangote Sugar for some sugar you brought into the conversation. I really love that. You're sitting in Zasumbo. Thank you very much. When Aradel comes for that $1 billion, $2 billion deal, be ready. And thank you from the Lagos Free Zone. Ashish, my regards to Dinesh. I wish he was here personally for this. Thank you so much. I appreciate all of you. Can we have a group photograph for all of them very quickly? And then, because we'll not be able to take questions from the online unless we're going to skip dinner, but I don't want us to. Yes, please, could you please step forward for, where are the cameramen, please? Let's take the group photograph, then we'll have the presentation by is that Michael and Mohammed Garba? We'll do some presentations and photographs. Okay, you should join us. You're part of it. Thank you.
Yesterday I asked my mama, Mama, could you please tell me the road from here I could take? She
Closing remark and concluding remarks. Please, please take your seats. This will take just about a minute or two. Yeah, presentation of gifts. Mohammed Garba will do that with Owen. Just a second. You need to. All my panelists. Ashish, just a second. Sumbo, just a second. Sumbo, would you kindly step back for a few seconds? Sumbo, just back here. Yes.
Over the card exchange, let them know card exchange is one.
Okay. Okay. Yes.
Thanks a lot.
Okay. Could you please move in a little bit further because of yes, so we want to get that. Yes.
Thank you so much.
Okay. Owen, please step forward. Yes, ladies first. Okay. Yes. Shindra, thank you. All right, thank you. Ashish? Please, thank you. And then, of course, Mr. Falade, please. All right, thank you, distinguished ladies and gentlemen. Please let me quickly ask the Group Managing Director and founding partner of Cardinalstone Partners Limited, Michael Nzewi, to give us a very brief closing remarks to bring this Cardinalstone Investors Conclave 5.0 to a conclusion. Thank you very much. You have the floor, please.
Thank you, sir.
Thank you.
Good evening, everyone. I know this is supposed to be vote of thanks, but I think I would also like to have some closing remarks. I think, first of all, I would like to thank the optimists. They've all gone. Owen, Omojafor, what's her name? Sumbo Latunji. When the invitations went out for this event, a classmate of mine sent me a message. And what he said, I'll quote exactly what he wrote. Make them no come spread doom and gloom projection. Oh. Now hope with very simple pragmatic solutions, make them come tell us. My mental state is very fragile right now. I'm sure he's following us online. I'm sure he's following us online. Why do I start from here? In September, Cardinalstone, in conjunction with the Nigerian Stock Exchange, sponsored or facilitated the investment roadshow which the federal government did at the UNGA in the US. And as part of that event, the president rang the closing bell at the NASDAQ Stock Exchange. And you know, I had the opportunity to spend some days with some of the most senior policymakers in this government. You know, when you are not privy to the data, you just think these guys aren't working. They are working. But the challenges we face are nearly insurmountable, but we will surmount them. We will surmount them. I think today, the three biggest challenges we face as a country is, number one is security. Security is what is affecting farming, which Mr. Ravindra talked about. Because of security, we can't farm enough to produce a lot of things. The cement and all of that, which you've been able to turn around, right? You have a factory somewhere, is not a farm. A farm is very expansive. So that is easier to manage. We can produce enough sugar today from imported raw sugar, we then refine. But to produce that raw sugar is the problem. So the number one biggest challenge, and the government is on it. They are not unaware of this. I think the other problems, inflation and foreign exchange. The foreign exchange ties into the inflation because a big part of our inflation is imported inflation. So now dollars is 1.4. I know that my favorite ice cream, Blue Bunny, will be 20-something thousand by tomorrow. How can we solve these two other problems? We had many aspects of it. These problems, if we take FX, it's a hydra-headed monster. There are many aspects to it. We're talking about food production, so we import less. Have we talked about the dollarization? And it is the people in this room that do that dollarization. So how can we help? What can we do to help in our own little way? A lot of people are making a lot of money today. Again, people in this room, in the stock market, in real estate, and so on and so forth. What are you going to do with those profits? Are you going to change them to dollars and take out of the country? When you do that, you are adding to the problem. You are adding to the problem. So there is something, I don't know if that word exists, but I call it patriotic investing. It is the only country we have. Foreigners will not come and solve it for us, neither will foreign investors. We are too dependent on foreign investments. It will not solve the problem. And I'll give you some examples to buttress that point. Coca-Cola Nigeria Limited, where do you think their profits and dividends go to? They go offshore. They will repatriate everything. Right Foods that produces Biggie, where do you think their profits go to? It will go to the man's hometown in Ijebu, and he will expand his factory. So he will not distort the foreign exchange market. He will not put pressure on the market. Where do you think my dividends go to? When I invest in Nestle and all these companies, where will my dividends go to? We are investing them in Nigeria. But that foreign portfolio investor sitting in London that we are hoping he should bring his dollars, where will his dividend go to? He has to go out. Lafarge versus Dangote Cement versus Bua Cement. Imagine that Dangote Cement and Bua Cement today was the size of Lafarge. And they want to take their dividends out. FX will be moving, we'll be crying. MTN versus Glo. MTN must take their dividend home. We went to ask them for foreign investment. So they must take their dividend home. And we have to provide the dollars for them to take home. So if we Nigerians cannot believe in patriotic investing and start investing our money here, all the money we are making, if we keep dollarizing and taking it out, this problem will never end. If we let the government normalize the market, bring in $20 billion. In 2 years, everything will shift from the central bank to the banks. Sumbo talked about $30 billion in dumb accounts. 5 years ago, it was probably $10 billion. If we continue on this trajectory, in another 2 or 3 years, it will be $50 billion. It will be $100 billion. And we'll be saying we don't have foreign exchange. The government does not have foreign exchange, but the country has foreign exchange. So the government has to find an acceptable mechanism to be able to access the foreign exchange in the system. Acceptable mechanism, a mechanism acceptable by the market. Are we issuing securities to the people who have these dumb accounts in the marketplace, where whether it's retail investors, 1-year paper, 2-year paper, 3-year paper. They invest in it. Hopefully it kicks the problem forward. Hopefully the government is able to return to the market because the market is surely reopening. Côte d'Ivoire issued this week. I think Sumba talked about it. The 9-year was issued at 7.875%. The size was $1.1 billion. 13-year was at 8.5%, and the size was 1.5. In total, Côte d'Ivoire issued $2.6 billion in Eurobond this week at sub 10. The book was in excess of $8 billion. So the market has opened. So rightfully, I believe, I know the coordinating minister of the economy mentioned at Davos that maybe in third or fourth quarter, but the market has opened faster than we expected. So, I don't see any reason. I believe Nigeria should be able to return to the market, perhaps in this quarter or early second quarter. That takes me to the FX issue. How do we solve that problem? It's a big problem, and we have to solve it from every perspective. Because without that problem being solved, today I believe we can go in and issue, if Côte d'Ivoire can issue 2.6, I don't see any reason why we can't go in there with a jumbo offer, $5 billion, take the money once and for all, and come and get the foreign exchange markets to function normally. Inflation, I think we already discussed that. We need to raise the interest rates. I think Sumbo talked about 300 basis points. I think it should be more like 300 to 500 basis points at the minimum. Now, when you do that, then things start normalizing. At some point in Ghana, in the course of last year, interest rates were as high as 40%. But where is their inflation today? Inflation was 54%. It peaked at 54% in the last 12 months. But they had to attack it with those high interest rates. Today, inflation in Ghana is down to maybe 24, 23 in that region within a year. So we can do it. These are basic economics. So there's nothing we're saying here that is extraordinary. So I think those are the challenges. I think I would like to talk a bit about the opportunities. I already talked about reverse dollarization. So we need to believe more in our economy and put our money where our mouth is. We cannot be critiquing or criticizing the government, but we're all taking our monies out. Let us invest in Nigeria. And I will use an example from what we've done in Cardinalstone. There's a company called iFitness, which we all know, right? That company is 65% owned by Cardinalstone. When we invested in iFitness, it was a tiny company, maybe 2 or 3 outlets. Yomi brought it, and we're like, what is this? This company is too small. But he said, look, the founder, and he's been to the outlets. We did the investments. That money that went into iFitness is not our money. It's owned by foreigners. It's not owned by Nigerians. We went to Nigerians. We went to the pension funds. We went everywhere when we were raising our private equity fund. They did not bring money. 90% of that fund is foreign money. So if I use iFitness as case study, a Nigerian company, Nigerian workers, Nigerian founder, foreign capital. So it's the same importation we are talking about. So in our own sector, we are not importing rice, we are importing capital. We are looking for FPI. We are too over-dependent on foreign investments. It's not a bad thing, but you must have the right balance. I don't have the data, but it looks like we are clearly too over-dependent on foreign investments. So when we exit that business, which is already happening, right, all the value that was created is going offshore. Nothing sits here. Nothing is going to sit here. But it was foreign, Nigerian workers, Nigerian business, Nigerian founder, Nigerian operation. But value created foreign. Which country is going to survive in that way? Some of these foreign businesses, we see how much did they bring into the country? But look at their value today. How much did we use to start Cardinalstone? Look at the value today. Imagine we were foreigners. I think the impact of the foreign exchange movements will require that many companies, and the moderator was talking about it, recapitalizing the economy versus recapitalizing the banks. Many companies will have to raise capital this year. It's already started with the banks. Wema Bank is gone in already, taking their money. First Bank and Fidelity Bank are preparing. And the simple reason is that in a lot of, the devaluation has eroded a lot of capital in the system. Devaluation, the removal of the FX subsidies, so all the reforms has eroded a lot of capital. So we need to recapitalize the economy. Today, to buy, say, 1 million liters of diesel is what? At 1,000 naira, that's 1 billion. 2 years ago, it was probably 100 million or 150 million. So a diesel trader, where does he get that extra amount of money? So you keep borrowing. At some point, you need capital in the business. So many businesses will recapitalize this year. Manufacturers, I mean, we've seen Cadbury is already doing a debt equity swap. So that's recapitalization. So there are opportunities there when they start coming to the market. I think the other big opportunity we've seen in recent times is really more of what has happened in the stock market, despite all of this doom. We heard about Aradel. I have a few companies, you know, when I see the numbers, it's unbelievable. Is Owen still here? Transcorp is done 1,282% in the last 12 months. That's 12 folds. Boa Foods 265%. Cadbury is 94, Dank Sugar is 371, Nascon is 571% in 12 months. You go to the banks, Access is 217, UBA is 265, and so on and so forth. The list is endless. I hope some of the people in this room were on that train when he left the station. Lastly, I'll talk about some of our products because we are actually in fundraising and there are some products that have recently been launched. Before I talk about the new products, there is a product which it's a very special product because it's sold privately. It's called the Cardinalstone Special Opportunities Fund. And I think it was launched in December of 2020. From then till date, that fund has returned 570%. Of course, those were in normal times because now we are seeing people returning 1,000% in a year. Last year, it returned 132%. If people in this room want to know more about that product, reach out to any of us. It's a private product. It's never advertised. The regulators are aware of it and they regulate it. But it's a privately managed and privately sold product. We have some public products which we've recently launched. There is an equity fund which we're selling now, and also a dollar fund. These are mutual funds for retail investors. Perhaps many people in this room think they can do it themselves, but just allocate a little amount to those funds, and then you can gauge whether you're outperforming the fund or the fund is outperforming you, and whether you should add more. Before I conclude, I have my private equity partners here, and I would like them to come out. We've hardly had them at these events, but I know they are fundraising now, which is why they are coming out. If your LPs will not have a problem with it, please come out. It's our event. So these are my co-founders at Cardinalstone, Yomi Jemi Beon and Femi Ogunjimi. They oversee our private equity business, which is where we did the investments in iFitness, and so many other fantastic investments we've done out of that platform. Mohammed, you can join us as well. Yes, you can join us, Mohammed. And that's the fourth founder in Cardinalstone. We have two other partners, where is Shelley and Elili. They recently made partners in the business. I think in concluding, I would like to thank everyone for coming to spend your evening with us. I know time is the most valuable asset for the people we have in this room. I was fighting with my head of HR today because we're looking at compensation review, and the amount she put to my, to our level. I said, hell no. Hell no. Exchange rate has moved 100%. What is this you're showing me? I can as well just, walk. I can as well just stop working instead and do other things with my time. So I know how valuable your time is. Thank you very much for coming by. And the wonderful panel members, we haven't had a panel this extraordinary. Last year we thought we were over the moon, but what we've seen this year, it just gets better. Owen Omojafo, thank you very much. Mr. Adegbite Falade, thank you very much. We met in London on the roadshow for the government. Mr. Ravindra Singh, Sumbo Latunji, and Ashish, thank you all very much. And to my colleagues who put this together, quite a number of them. Philip heads the research team, even though he claims he's the chief servant officer. He's trying to copy me. Then, can you all get up, please? Philip, Busola Okeowo. Busola oversees our institutional sales team. Yeli works with Busola in institutional sales. And Joy heads our brands and corporate communications team. Fantastic work you guys are doing, Joy. We used to be very publicity shy, but they've dragged us out. Who can no longer hide. We have Fisayo Ademilua in research, Bimbo Adere in securities trading, Emmanuel Ojike securities trading, Iyanuola Taiwo, high net worth individual Lagos, Sibyl Oyakure deal origination and client coverage, Jerry infrastructure fund, that's a new product in the pipeline, Vida CSRL, that's registrar, Omolola Folagbadi portfolio management, Root Olabode brands and corporate communication, and Awele Cardinalstone finance. Lastly, so you can all come forward. Thank you very much for a wonderful job done. I know I've said lastly like 3 times now. This is the very last. This is the very last. Before then, the keynote speaker, representative of the chairman of the Federal Inland Revenue Services, Mr. Olusegun Shosimi, thank you very much for coming by to spend some time with us. I think the last thing I wanted to say is a new business we're going into this year. I know it's a small one because our peers are doing the big one. Nobody asked Sumba about it, but they've done something in that space. Cardinalstone is actually just going into the pension business. We acquired a small pension fund. Hopefully we're able to grow it like we've done in all our businesses, and we'll definitely need the support of our friends in this room. And we're currently at the regulators trying to get the approvals for the transaction. I think, Mr. Bisong, you can join us if you're okay with it. So thank you very much, everyone. Thank you, thank you, thank you. And lastly again, what's his name? Boasi, thank you very much. I think we met many years ago when you were doing the Bloomberg project. Thank you very much for joining us. It's just a different style. This is the first time you are moderating. And I've been getting a lot of comments online. Thank you very much. Yeah.
Thank you.
So I think there is some refreshments. I don't know what more is it, dinner or cocktails? Cocktails. Yeah.
And now finally, and finally, thank you all for coming. And for those who are online, thank you very much for sticking with us throughout the last, I think, 2 hours or so. Thank you so much. We appreciate it. Thank you, Cardinalstone, our partners, all the heads of the various units, clients. We thank you very much for coming here. And we appreciate, we'll see you again at the next Investors Conclave 6.0. Thank you very much. Have a good evening, everyone, and goodbye for now.